Outperformer by far, up now by 1.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. So you can head over to youtube.com and search Bloomberg Radio. Charlie was just calling out some of the home builder stocks, Jess. I'm looking at the year-to-date performance. 70, 80, 90% gains this year. Wow.
And especially when you think back to July, actually home builder stocks pulled back a lot and were at one point in a bear market off of their high there, but have come back tremendously since then in the fall.
Yeah, it's just amazing the performance there. And you know, people aren't moving out of their existing homes. So
right.
The only way you can get into a new home is to build one. So I guess that's the long-term secular story there for these building stocks, but they've been just on a tear lately. So has the market here. And we've got another update here, S&P up 0.4%. Abigail Doolittle joins us here in our Bloomberg Interactive Brokers studio. Abigail, what do you make of this market action today?
It's pretty amazing, this rally that we've had on our hands now for more than 6 weeks, and it seems as though little is likely to stop it this year. The one possibility could be PCE on Friday. The year-over-year number is 2.8%. That's what the survey is calling for versus the prior of 3%. If it somehow comes in even slightly higher than that 2.8% based on the way markets a number of weeks ago reacted to a CPI that came in 0.1% better, perhaps that could put a little bit of a dent and convince some investors or traders that maybe the Fed won't be cutting as soon as many want them to be. The question is then, what does January bring? Now, something that I would note, it's interesting. So the NASDAQ 100 is 5% above its July high, suggesting we could see something similar from the S&P 500 and the Russell 2000. That means the NASDAQ 100 has broken out of this year's range, that mini range there, as investors tried to figure out. That said, if you pull it back to a 5-year chart, it's basically, we are at a record high for the NASDAQ 100,
yep.
But we're in a territory where you could easily see there's a lot of long-term resistance there. So I would say that watch the NASDAQ 100. That's going to be the tell for many of these other indexes, whether or not this bullish attitude carries through into the new year.
Let me ask Abigail. RSI.
I knew that was coming. I was looking. I knew it was coming.
Overbought here.
I have them pulled up.
Thank you. We're
over 80.
Am I calling my desk and getting out of this market?
So I don't make investment recommendations. I know you're not asking me that, but just to.
What are we hearing from the pros out there? Are they kind of saying they're a little nervous just from a technical perspective?
It's interesting, actually. Ari Wald, who's the person who really taught me a lot about the RSI, he was in one of the notes that hit my desk over the weekend, was talking about a pairs trade for an overbought situation. He also taught me you don't have to be concerned about an overbought RSI so long as the trend is higher. It's once it starts to curl down. So
That's
when I'm
right.
looking at the Russell,
secondary.
when I'm looking at the Russell 2000 right now, the RSI, it had been as high as, I think, let's see, I'm trying to see it right here. Well, for 78, 79. Now it's at 76.
Mm-hmm.
That could be a cautionary note of some sort. On the other hand, it could pop higher. So it's too early to say, but the fact that we are overbought, the question is, are we going to take the elevator down or are we going to tiptoe down, and when does that happen? Unless barring a really hot PCE number, I don't think that that's going to happen this year. But for January and February, I think that is the question, and it will probably go back to rates. There's so much talk about how Fed Chair Jay Powell, of course, did that surprise dovish move, but then all of the officials are coming out trying to talk him down, but it's not working. Will they do more? There's always that possibility that they'll try to somehow surprise the markets, that they've gotten a little bit more of a reaction than they were hoping for.
So S&P about 0.7 away from a record. What levels are you keeping a close eye on for resistance and support?
So relative to the S&P 500, I'm really watching the NASDAQ 100 to see. I mean, to me, it's a foregone conclusion that the S&P 500 before this year is out will hit a new record high. And that was actually true a few weeks ago when the S&P 500 tech sector actually hit a record high. Once you have a big sector like that hit a record high, any sector really, but especially a big one like that, it seems likely. The question is, how long? The question is, it's very likely the gains will be consolidated in January and February. And then the question is, do we go back down into the range from this new set of all-time highs, or do we break out and take the stairs higher, for lack of a better way to put it.
Yep, absolutely. It'd be interesting to see how we start the year. It looks like we're going to finish the year pretty strong here. Abigail Doolittle, thanks so much for joining us. Abigail Doolittle, she
Always the
covers
best.
all the markets. She
Love
is
it with the technicals.
We're happy when we can get her here in our studio here in New York City. Let's talk transports. All right, I'm not a big podcast guy, but I actually do subscribe to this thing called Talking Transports. Lee Klaskow from Bloomberg Intelligence, he's
What a
got
start,
it. Because,
BI.
I mean, when you got one titled Werner on better trucking conditions in 2024, boom, I hit that. Because I
Yeah.
care about the truckers, I care about the railroads, the
important.
ocean stuff. It's A, I used to cover those companies, but B, they give you a great insight
Into the economy.
Yep, Lee
Yeah.
Klaskow joins us here in our Bloomberg Interactive Brokers studio. He's been covering the transports for a long time. He does that for Bloomberg Intelligence now. Lee, I want to start with FedEx. Man, that stock is ripping. Up 62% year to date. They're going to report numbers after the close. What do you expect to hear?
What we expect to hear is share gains. So there won some share gains from UPS. As you should probably remember, UPS had a labor contract negotiation that went down to the wire, and shippers diverted their freight away from UPS, and FedEx was a big winner in that. They also won share from Yellow. Yellow, as
Okay,
you
that's right.
remember,
Yep, back in the day.
in your transportation days.
YELL.
Yeah, they were a large less than truckload provider. They shipped about 50,000 shipments a day, so they had about 6 to 7% of the market, and they went away.
Wow.
So that's a lot of pallets that went up for grabs. And FedEx Freight is the largest LTL carrier in North America, so
that
they're
right?
able to benefit.
Man, I didn't know that.
So when you're looking at FedEx
You know what
and
LTL means?
LTL,
Less than truckload.
ooh,
Yeah,
Yeah,
good
like
stuff.
as opposed to TL, which is not team leader, it's truckload.
team leader.
And Paul, if you want to learn more about it, we actually we have a new podcast today.
You do?
With the CEO from ArcBest.
ArcBest celebrated centennial this year.
They did. Happy birthday, ArcBest.
Yeah, very cool. So ArcBest, are they sort of a private trucking company, LTL trucking company?
No, they're public.
They're public.
ARCB.
Oh, I didn't do that deal. How did
Yeah.
they get public? I took all those companies public back in the day.
They were public, and then they a while ago they had some activist investors, and then they took themselves private, and they went public again.
Fort Smith, Arkansas.
Yeah.
That's where I went when I was doing this trucking.
Really?
deal. God, what did we do? The Heartland, I don't know, Des Moines, Iowa or something
Oh
like
yeah,
that.
yeah. That sounds like
It's awesome.
Sounds about
Great
right.
industry.
Looking at the Dow transports from their October low, up close to 20%. When you're thinking about, we will hear like you're talking about FedEx after the bell today, but when it comes to these transport companies, what are they telling us about the economy?
That's a good question. So we've been in a freight recession for quite some time, and we're coming out of that freight recession. The less than truckload market is actually negative right now. And one of the good things about when we were talking about FedEx earlier, why it's a good thing that they got all this market share from Yellow, it comes at a time when volumes were down because demand has been down. So they've been able to mitigate that impact. But what we're seeing is from our vantage point and conversations that we have in our channel checks is that, in the truckload market, we seem to be at the bottom. We're bouncing along the bottom, and demand is poised to do better next year. Not great, but better. And we could see some growth. And, we expect growth from the railroads, whether it's commodities or intermodal volumes in the mid-single digits next year. We expect truckload volume growth in the low single digits next year.
So that's not recessionary data from your transportation.
No,
companies.
so I think what we're doing is we're reflecting positively on a lot of these industries because we've been down for a while, and some of that has to do with the economy, and some of it has to do with really difficult comparisons.
Right, because everybody was stocking up like crazy back in the
Betcha,
day.
yeah.
Okay.
And the destocking cycle appears to be over from a lot of the retailers, which is really good for the truckload market.
So, I look at FedEx, again, up 62%, but UPS down 7%. Is that reflective of just their operating?
They also had the strikes over
strikes?
the summer
Yeah,
too.
Yeah,
There
so what you see there, so it's all about your 2 points from a performance standpoint, and this year it's all been about UPS dealing with their labor contract issues, and FedEx kind of getting hammered last year and
Okay.
coming off their lows. They've initiated a bunch of new strategies. They call it Network 2.0. Their Drive initiative is supposed to save about $6 billion. They're really, FedEx became a fat company, and they're trimming the fat right now. And they're also looking at ways that they never really looked at before, like combining their ground and express networks. It's going to take time. It's going to be messy. It's going to be lumpy, if you will. But I think the market is actually starting to believe that management can finally execute.
How did what's going on in the Red Sea and it comes to shipping, how do you foresee that affecting transport companies?
Yeah, so it's just another kind of shock to the supply chain. We've seen container liner rates, which are down 29% from last year. They're up 10% over the last 2 weeks. And that's really driven on that. Because at the end of the day, if a ship can't go through the Suez Canal, it's got to go south along Africa. Wow. It adds about 10 to 12 days. And so that, time is money. So it's going to add costs to shippers. And listen, it's going to be inflationary, but that inflationary pressure, I'm not going to say transitory because I think someone got in trouble for that, but it's definitely going to be short-term in nature because the U.S. government is and its allies, they have a coalition to deal with the Houthi rebels. And, it might not create the most fluid supply chains because, ships might have to operate in a convoy, if you will.
Wow.
But it'll be safer for ships to traverse the Red Sea.
I didn't even, quite frankly, I have to be honest, I didn't even know where the Red Sea was
until
a couple days ago, and I had to go
this was
Google
like
map it.
With Alaska Air when you thought it was.
Well, it's Jerry Garcia on it.
Oh my goodness!
I thought that until very recently in my adult life. But I mean, 12% of global shipping goes through the Red Sea. So I mean, that's Maersk. I mean, those are the companies you cover, right? The big.
Yeah. So a lot of the liners like Maersk, Hapag-Lloyd, the two private ones, MSC and CMA, they all announced that they're not going to go in the Red Sea because of the risk not only to their crews but to cargo and ships. Ships are pretty expensive. They're around $70 to $100 million each. So that's very expensive. And insurers do not want insurance companies don't want the ships that they're insuring to be in those waters because obviously it'll increase their costs.
Talk to us about the railroads. What's the theme for 2024 for these railroads? Is it kind of just riding the economy? I mean, what are you thinking about, or what are investors thinking about?
Well, I'm thinking about service. So, rails talk a big game about service, but I really think they need to deliver on that. More and more of the railroads are kind of have pivoted to a precision scheduled railroading or precision railroading. They like to call it different things, but at the end of the day, it's Six Sigma for the rail industry. And in order to lower costs, it can't come at the expense of service. And so, you'll see railroads maybe have more employees during down cycles than they might normally have, just so they're prepared for when the uptick happens. And also, in addition to service, I think it's growth. It's where are they going to grow from? Because they're not going to grow from major M&A because the large class ones will just not be able to merge. They're just too big. So it'll be tuck-in acquisitions of short lines and kind of looking to take advantage of trends like cross-border, nearshoring, that kind of stuff.
We only have about maybe like a minute and a half left, but I want to get into airlines because it is the holiday travel season. I know airlines going into the fourth quarter had cut some of their outlooks because they were worried about demand, but what are you seeing? Because it seems like people are still traveling.
Well, the only thing I know about airlines is I'm on them. That's George Ferguson, my colleague at BI. I do not cover airlines, but I do cover some of the air freight carriers. And what we're seeing there is capacity kind of getting back to pre-pandemic levels. And it's interesting because, I mentioned earlier that liner rates are down 29%. Air freight rates are only down like high single digit, low double digits. So they've been a lot more resilient since the pandemic. And that's really because there hasn't been, while the capacity is nearing pre-pandemic levels, there's not a lot of slack capacity out there.
All right, Lee Klaskow, thanks so much for joining us. Lee Klaskow, he is a senior analyst covering all the transports and logistics for Bloomberg Intelligence. He's also got a podcast out there, Talking Transports. The focus will be on trucking, railroads, ocean, and air freight markets, and everything in between. So check that out. He always gets a lot of good guests on there. And again, this most recent week, ArcBest, one of the biggest trucking companies out there, we got their chairman, president, and CEO on to talk about the transport business. So good stuff. Check that out. S&P 500 here today, holding on to the gains up about 0.5%. Same for the Dow, same for the NASDAQ. The small cappers having their day up 1.7% here for the Russell 2000. Yields come in just slightly. 10-year Treasury about 3.90%, and WTI crude up 1.4%, $73.48. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Pet stocks, they are on the move this morning after Jefferies initiates coverage on the industry. We get more on that from Bloomberg's Simone Foxman.
Talking about how average spend per household is up 60% since 2019, mainly driven by people buying higher quality products for their pets. So that's going to benefit names like Chewy, but it's not necessarily going to help folks like Petco, which is focused on a little bit more the value oriented of that play.
We have Chewy right now. They're up about 7% nearly. Petco is up about 2%. And Jefferies also says the real winner of the pet space is the animal health sector, companies like PetIQ. Apple racing to stop a ban in the U.S. on some of its smartwatches, set to start on Christmas Day as a result of a patent loss. Bloomberg's Alex Webb explains what will happen over the next couple of days.
What Apple is going to do is they're going to stop selling these devices online in the US starting on Thursday and in their retail outlets starting on Christmas Eve. That doesn't mean if you're in the US you won't be able to buy this device if you really want it. You can still get it in Walmart, in Costco and other third-party retailers. But it's a bit of a blow to a device which analysts estimate generate about $17 billion in annual revenue for Apple.
And it's up about 0.5%. And the launch window for Jeff Bezos' Blue Origin rocket expected to open in just under 20 minutes. That's according to its website. It's a redo for New Shepard after an issue with the ground system at the launch site caused the company to cancel the flight yesterday. Now, that rocket will not be carrying any passengers, but instead a number of research experiments to be tested in space. It will be the first flight in 15 months after an in-flight failure last year. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ continuing to advance. Just about the best level of the day right now on the S&P 500 index. 21-point gain right now, up by 0.5%. NASDAQ, the composite index, up 69, higher by about 0.5%. Dow Industrials up 218, up now by 0.6%. Russell 2000 surging 35 points now, up 1.7%. 0.15%. Again, to put that in context, S&P by comparison up by 0.4%. 10-year yield 3.90%. The 2-year 4.43%. Spot gold up $18 the ounce to $2,045, up 0.9%. And West Texas Intermediate crude oil up 1.4%, $73.49 a barrel right now on WTI. Equities pushing higher, yields falling after the latest signals from a Fed policymaker as traders wager the central bank is on track to engineer a soft landing and start cutting rates. Bank of America CEO Brian Moynihan says the bank is continuing to invest in its markets division as it seeks to increase market share. In a wide-ranging interview on Bloomberg Radio this morning, Moynihan also talked about the economic backdrop and the health of the American consumer.
There were these periodic things since the pandemic. First, people hold up and bought stuff for their house. Then they started to go out and travel some. Then they went to restaurants. Then they had another set of travel, different kind of travel, international travel. And then they got to concerts and things. That's all through the system. And now you see it spending kind of evenly across. Retail stores are doing fine. Online sales are strong. They're all up, 2-3% flattish, 2-4%, depending on what it is. So everything's kind of normalized for the U.S. consumer and how they're spending money. They are in very good shape.
And Bank of America shares, they are trading lower today. We got Bank of America down now by 0.3%. Among the names reporting after the close of trading, as we heard from Arlie Klaskow, FedEx shares lower a little change now by about 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Mitten and Paul Sweeney here in the Bloomberg Interactive Brokers Studio. And 'tis the season, Paul, because we talk so much about seasonality heading into year end. And who better to bring in than Jeff Hirsch, CEO at Hirsch Holdings and the editor of the Stock Traders Almanac, joining us on Zoom to discuss his correct market call this year, what to expect for the Santa Claus rally period, as well as the outperformance here in small caps. So just to want to point out, Jeff correctly called the S&P 500's correction coming out of the summer and into the fall, and then also the rebound that we're seeing here at year end. He also, over a decade ago, he predicted that there would be a Dow super boom in the wake of the global financial crisis that would drive the blue chip average to above 38,000 in the mid-2020s. If you look where the Dow's trading at now, around records again, and currently trading around 37,500. So not too far away from that call he made a while ago. But Jeff, it's always really great speaking with you. And thank you for taking the time to join us, because I know you're busy this morning and had a doctor's appointment. So you made times for us. But I wanted to start off first because Paul and I always talk to people and portfolio managers will come in and, once we get to the fourth quarter, as you know, because you've done this for so long, people will talk about the Santa Claus rally period. But can you break down to our listeners what the indicator is and what time span it actually crosses over?
Yeah, it gets misused. I mean, it's a fun phrase, Santa Claus rally, rolls off the tongue, but it's something my father discovered and devised back in 1972. It was published in the 73 Almanac. And it's this short 7 trading day rally, the last 5 trading days of the year to the first 2 of the new year. And it's not this huge, gain. It's about a 1.3% gain on the S&P on average. But the key thing is that it's not a strategy, it's an indicator. And when that, period is not up, it's an indication that there's something amiss in the markets. You usually have traders and prop desk people picking up stocks that are sold off for tax loss selling. Rest of us are sort of away celebrating with family and friends and traveling and that sort of thing. So as my father said, some 60, 70 years ago, when if Santa Claus should fail to call, bears may come to Broaden Wall. So it's an indication that it's a catchy tune. He could turn a phrase. But we've combined that with the January barometer, another one of his inventions back in 72, the same time. They're both in that 73 Almanac. The full month January barometer, everyone knows as January goes, so goes the year.
Right.
And then there's the first 5 days early warning system. January's become a bit of a profit-taking period. It's lost some of its luster in recent years, and we've had some errors in the January barometer recently. So we combined all three to this January indicator trifecta. And, the bulls win when we hit that trifecta. We hit it this year in January 23. Since 1950, when all three are up, Santa Claus rally, first 5 days, full month January barometer, the year is up 28 out of 31 years, 90.3% of the time, for an average gain of 17.5%. The subsequent 11 months, February, December, up 27 of those 31 for a 12.3% gain. So, you know, we didn't have that trifecta in 2022.
Interesting.
Again, you know, we were going into a midterm year, so we're already concerned. So we'll be looking at those things. Right now, I'm pretty bullish. I mean, this is the pre-election year. We've got a good chunk of new highs. We're seeing it right here happen in December, the pre-election year. A lot of them on the last trading day. Everyone started getting, you know, all the bears are now getting on the soft landing bandwagon. So we'll be watching these indicators and market action going through January. And, you know, our forecast, our early forecast is already pretty bullish for 24, power of a sitting president. But we'll be fine tuning that in the newsletter on Thursday for subscribers, and then we'll be watching the market. And if things go awry, you know, whether with Santa Claus or January barometer or something happens with the election, I mean, if something were to change where Biden's not, you know, the sitting president running, that would change our outlook a little bit.
Jeff, you know, we've seen since late October this S&P 500 rally 15%. It's been such a move in November and December here. What do you make of that?
It's pretty typical 4-year cycle seasonal behavior. It's encouraging. Everyone had the small caps were in the doghouse, but you know, I put out some of the recent charts about the small cap outperformance starting, you know, ticking in around late October, and really the bulk of it is the last half of December. I mean, gains beget gains. It's supportive. We're starting to see some breadth, you know, supporting it. We're seeing, you know, broader participation in this. You know, it's a rally based upon, you know, the success of the economy. There's this productivity anticipation with AI. Market may be a little ahead of itself. We're going to have some corrections, you know, throughout the year, just like we had in 23, a very bullish year, but we had a nice, you know, 10% plus correction depending upon the index you look at. What I make of it is that it's a bullish indication that we've got further upside here. So my biggest concern at the beginning of this year, I don't know if you remember, Jess, when I was talking, is that I wasn't bullish enough. I mean, we were already forecasting, you know, 15 to 20% gains for the S&P. Here we are with that. So again, you know, maybe I wasn't bullish enough, but pretty close.
What I'm wondering is, because you're walking us through the seasonality with small caps, typically we tend to see that usually historically more in mid-December, and then as you know, going into year end with some of that window dressing, is some of the gains, especially the bulk of it that we've seen, like you were talking about, that started out toward the end of October, does that potentially steal some of the typical gains we would see in the last couple of weeks in December, or do you expect this to continue for small caps?
To continue. I think the small caps were catching up with the rest of the bull market based upon, you know, the interest rates finally settling down. That seems to have a bigger impact on the small caps. I don't know if we're going to get as much of that, you know, small cap outperformance as we've just had. I don't think it's over whatsoever. I think we're going to get that regular, you know, small cap effect, what used to be the January effect in the last half of December and into January. I don't think it's taken away from it. I think it's just catching up and setting us up for a continuation of small cap outperformance.
Jeff, what do you make of the Magnificent Seven here in 2023? That was a unique aspect to this market performance this year.
There's always been leaders. They're still leading. You know, there was the Nifty 50 back in the late 60s. Yep. You know, these companies are doing, you know, fabulous things. We're using their software and their products right now as we speak. Some of the other, you know, industries are catching up. But, I mean, you've always got leaders. I'm not so concerned that the market's, you know, being led by 7 stocks. There's plenty of other positive, you know, advancing, declining situations and new highs. And, you know, I think we had the most new highs since 21 on the S&P. You know, it's not just the Magnificent Seven. That's an old story. It's kind of like the people who are calling for the bear market, looking at that it's yield, you know, curve inversion from 22. So I'm not afraid of the Magnificent Seven. Let them lead. There'll be other people stepping in.
We only have about about 20 seconds left, but you were talking to us earlier about how coming into this year, you should have been even more bullish, even though you're already seeing a 15 to 20% rise in stocks this year. What percentage are you expecting in 2024?
My early handicapping is about 8 to 12% on the Dow, maybe a little bit more S&P and NASDAQ, and I'll be fine-tuning that over the next couple of days as we finalize our annual forecast in the newsletter. So, yeah, I mean, above average election year performance. You know, when a sitting president's running, the Dow's up 12.8% on average. When it's an open field, it's minus 1.5%. I think we've got a lot of tailwinds here going into 2024. Election, technology, AI, and a rising market.
All right, Jeff, thanks so much for being with us. Really appreciate it. Jeffrey Hirsch, CEO of Hirsch Holdings and editor-in-chief of the Stock Traders Almanac. Let's head down to Washington, D.C. Amy Morris has got World International News.
Thank you, Paul. Israeli President Isaac Herzog told ambassadors from around the world the country is prepared to agree to a second humanitarian pause in fighting in exchange for the return of more hostages held by Hamas. Hamas still holds about 129 of the initial 240 or more people abducted from Israel on October 7th. And the UN Security Council is meeting again today. That group expected to vote on whether to call for a ceasefire. More commercial ships have come under attack by drones and ballistic missiles fired by Houthi militants while passing through the Red Sea. As a result, a number of shipping companies are diverting their fleets around Africa. Addressing troops in Bahrain, Defense Secretary Lloyd Austin announced the U.S.-led 10-nation security initiative named Operation Prosperity Guardian.
That operation is bringing together more than a dozen countries from around the world to conduct joint patrols in the Red Sea and the Gulf of Aden.
More than a dozen countries, and growing, have already agreed to join the security operation. Senate Republicans are making clear that a deal on Ukraine aid and border security will not happen before the year is out. Bloomberg's Jody Schneider has the latest from Washington.
It looks like this is going to be a situation that may come up in January whenever something goes unresolved over a recess. That's always a question mark, of course. The Pentagon says it will run out of money to replace U.S. weapons sent to Ukraine by December 30th unless Congress approves new funding.
Bloomberg's Jody Schneider in the nation's capital. Chinese leader Xi Jinping calling for efforts to minimize casualties after an impoverished region in northwest China was hit by an earthquake. More than 100 people are dead. Chinese state media say at least 126 people died in the magnitude 6.2 earthquake that hit just before midnight. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all pushing higher. Record now for the NASDAQ 100 index. S&P up 23, very close to session highs, up by about 0.5%. NASDAQ, the composite index, up 76, gain there of 0.5%. Dow Industrials up 37,527 for the Dow, now up 221 points, up by about 0.6%. Equities are legging higher. Yields are falling after the latest signals from a Federal Reserve policymaker as traders bet the central bank is on track to engineer a soft landing and start cutting rates. We've got the 10-year now yielding 3.95% with a 2-year 4.43%. Spot gold is up 0.9% right now at $2,045, up $18. And West Texas Intermediate crude oil also advancing today, up 2.1%, $73.98 right now for a barrel of WTI. Investors continue to debate the size and timing of potential Fed rate cuts despite policymaker pushback. Avery Sheffield is a senior portfolio manager at Rockefeller & Company.
The Fed has told us, I know they're trying to potentially walk it back a bit, but they're not going to let this economy weaken in any material way. And they're not saying it, but I think that they're going to be willing to have inflation be a little bit higher if they're concerned at all about the jobs market.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Oil prices are advancing as more companies shun the Red Sea after a spike in vessel attacks along the key shopping route. ExxonMobil among the oil stocks advancing again today, up another 1.3%. BP, the ADR, is up by 1%. Chevron up now by 1.2%. Again, recapping, stocks are higher. S&P up 22 points, up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Jess Metton and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Radio. You know, Jess, I think the building consensus here, particularly over the last 6 weeks or so, is that this Federal Reserve will be able to successfully manage a soft landing. But I think I found the other side to that trade. Matt Stuckey joins us. He's a senior portfolio manager at Northwestern Mutual. Matt, I know you guys recently published your asset allocation focus entitled Why the Final Mile in the Battle Against Inflation May Lead to Inflation. What's your call here going into next year?
Yeah, thanks for having me on. You know, we are still a little cautious on the economy as we kind of think about 2024. And it basically just boils down to this. We do still believe in the long and variable lags of Fed tightening. And the reality is that this has been the fastest and steepest tightening cycle in over 40 years. And so that catches our attention. And if we're thinking about the ultimate outcome of this, you know, really for sustainable kind of inflation to kind of meet the Fed's 2% target, we have to see, you know, further deterioration in the labor market. You know, just in terms of kind of where inflation sits today versus where the Fed wants it to be, wages need to move about, you know, a full point lower or so versus where they sit today. They're at 4.3% or so year on year. And we need to see wages in that 3.2 to 3.5% environment. And if you kind of go through history, anytime we've seen wages contract more than 1.5% or more, that's always been kind of in recessionary environments. And unfortunately, we still think that at the end of the day, sometime in 2024, probably in the front half, you know, that's going to be the ultimate outcome. You know, certainly markets are celebrating, you know, the Fed backing off in terms of this hiking cycle. Usually, whenever this happens, you do see, you know, broad-based asset class participation in terms of a move higher, whether it's fixed income, equities, you know, currencies. And so we're in that environment now, but, you know, we do think that, you know, we're still more cautious as we think about the ultimate kind of lagged impacts as we move into next year.
How do you square that away with the resilient consumer spending data that we have seen? I know we'll get another update on that data for the prior month at the end of this week, but it seems like when you're looking at a lot of the retail numbers still holding up real well.
Yeah, no, it's a really good point. I think it's just a reflection of kind of, that the labor markets are still fairly healthy. If you're looking at the wage environment, we're still at, 4.3% year on year. And, contrast that to kind of inflation ex housing, there's, a good kind of real wage kind of growth story still percolating throughout the economy. And that's supporting retail spending, especially in the holidays, which we're in right now. And so, I would just argue that, over time, we do expect this to be kind of more of a multi-quarter slowdown, and we are seeing a slowdown, but certainly the resilience this year has been a bright spot in the economy.
So, Matt, if you're thinking about recession, that's still in your outlook, how would you describe kind of the recession that you guys are thinking about forecasting?
Yeah, I mean, this is more kind of garden variety versus what we've seen the last two recessions, whether it was the pandemic or 2008. Something analogous to maybe a 1% or 1.5% drop in real GDP, a 1 or 2% increase in the unemployment rate. So something more consistent with what we went through in 2001 in our mind. The good news is that with the Fed already in restrictive territory, there is going to be a lot of room for the Fed to cut. And so, that kind of puts a little bit of a floor underneath the depth and duration of what type of contraction we see in our forecast. And so it's not, the sky is falling kind of outlook from our perspective, but it is one where we think that we need to be a little bit more cautious in terms of our positioning. And so that's why, fixed income is highly represented in our portfolios and overweight for our clients.
Goldman Sachs had some interesting data today in one of their macro notes, but they were looking at the S&P 500 and how it performs during rate cutting cycles from the Federal Reserve. And not surprisingly, when it's not associated with a recession, holds up well for the equity market, whereas when there is a recession, as you know, typically that's something that hurts the broader stock market, especially when you think of those emergency rate cuts that did happen in the beginning of 2001. So the stock market didn't like that, but we have seen other times where the economy was able to avert a recession. How do you view the timing of cuts and how many, as far as when you think of it as something as policy just easing a bit versus when you would be concerned more about the trajectory of the economy, maybe growth decelerating faster than investors had expected?
Well, typically when the Fed's starting to cut after a pretty significant hiking cycle, that's usually when some of the weakness in the equity market starts to percolate up to the surface. And I would, if I had to kind of make a guess about kind of how this next cycle would unfold, the easing cycle that's likely in front of us over the next 12 to 18 months, we would kind of agree with history kind of repeating itself from that perspective, albeit probably to a shallower and kind of less severe perspective. What we would also say just around, when the Fed cuts, typically it's in response to some sort of weakening in the labor market or just a general slowdown in macroeconomic activity. And so, if the Fed's response if the Fed's cutting in response to what they see as a slowdown, that's a different environment versus an insurance cut, if you want to call it that, or just a modulation of what they're seeing of real rates. And I'm curious whether or not they're going to be proactive from that perspective. And I was a little bit surprised with Chairman Powell's press conference where he kind of outlined how you're thinking about real rates and kind of modulating that, kind of disregarding some of the labor tightness that they've been concerned about in the past.
Hey, Matt, about 30 seconds. What's your asset allocation heading into 2024?
Yeah, we're still defensive, overweight fixed income, which we kind of see as kind of winning in either scenario. One is, we can get the nice carry that we get in kind of intermediate term fixed income, but also if we're correct in recessionary outcome, there's the opportunity for capital gains. But we don't have 100% hit rate in terms of our calls. Obviously, no one does. And to hedge against that, we think actually a nice kind of cheap form of insurance against kind of more of a defensive position is a little bit of overweight to kind of cheaper asset classes that have discounted, some of the weakness that we see ahead of us from a macro perspective, and specifically that's U.S. small cap and mid cap equities.
Matt, thanks so much for joining us. Always appreciate getting your thoughts there. Matt Stuckey, he's a senior portfolio manager, Northwestern Mutual, based, guess where?
Where?
Milwaukee, Wisconsin.
Of course, that's where they all are
That's
based.
where a lot of these smart fund managers are.
They really are.
So it's good stuff there. That's why I love to go in Milwaukee all those years. I would go in December, January, February, get the double II votes.
I
and then I go to Houston in like July, it's 300 degrees out, get the double weighted II votes. That was always my strategy. S&P 500 up 0.5%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Xfinity customers, well, they may have had their personal information hacked. We get more on this story from Bloomberg's Steve Podisk.
Comcast says its Xfinity systems were hacked between October 16th and 19th. The cable, broadband, and phone service provider says the unauthorized access led to customer information likely being acquired, including usernames, hashed passwords, contact details, and the last 4 digits of social security numbers. Xfinity is requiring customers to reset their passwords to protect affected accounts.
Comcast is up just a fraction. And Amazon could bring more sports to its Prime Video. Bloomberg's Steve Rappaport has that story.
Amazon is in talks with Diamond Sports Group and some of its creditors to invest in the bankrupt regional sports broadcaster and partner on streaming. Sources tell us the potential deal would give Amazon multi-year streaming rights to professional baseball, basketball, and hockey games.
And Amazon is down about 0.2%. And from streaming to AI, back in August, Amazon began using artificial intelligence to convert billions of reviews into brief summaries. Well, it turns out the results weren't perfect. Some wound up giving an inaccurate description of a product, and others exaggerated negative feedback. And that's bad news for merchants who rely on those positive reviews to boost their sales. Amazon down about 0.2%. And Amazon and UPS do it. Now FedEx allowing customers to make returns without a box or shipping label. It's taking place at more than 10,000 locations, including 2,000 FedEx office stores. Now, FedEx reports after the markets closed today. Investors curious to see if the company benefited from contract negotiations with UPS and the bankruptcy of Yellow. Those are the stories we're following. I'm Lisa Mateo. This is...
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, holding on to these gains here this morning. S&P 500 up 0.4%, as is the NASDAQ. Again, the outperformance today is in the Russell 2000. The small cap stocks up 1.5%. Yields come in just slightly here. The 10-year Treasury 3.90%. WTI crude oil up 2% again today, so now just below $74 per barrel. We'll keep an eye on that. It's certainly been moving higher over the last several days due to the concerns in the Red Sea. Certainly have an impact on that market. Let's head down to Washington, D.C. right now. We'll get world and national news with Amy Morris.
All right, thank you, Paul. Jeff Bezos' Blue Origin space tourism rocket flew to space for the first time in 15 months.
Of our BE-3 engine. And liftoff.
That marks the possible resumption of regular flights for Blue Origin following an in-flight failure last year. The New Shepard rocket isn't carrying any passengers on this trip. Everything seemed to go well. It touched back down on Earth about 11 minutes after takeoff. After a spate of attacks on commercial shipping in the Red Sea, the U.S. has announced a new maritime task force aimed at protecting vessels from Houthi militants in Yemen. Bloomberg's Jody Schneider has more on this multinational effort dubbed Operation Prosperity Guardian from Washington.
The real concern is commercial here, not only the attacks and the geopolitical implications, but the attacks in the Red Sea, which handles about 12% of world trade as a key waterway for goods and energy, are really a fresh threat to global supply chain issues that we saw during the pandemic.
Bloomberg's Jody Schneider in Washington, D.C. Transportation Secretary Pete Buttigieg says the federal government is ready for what is expected to be a record-breaking holiday travel season. Secretary Buttigieg at Washington Reagan National Airport, where he warned parts of the country may be seeing some bad weather around Christmas and New Year's, but he expects airlines will not repeat last year's travel meltdown.
I don't want to jinx us, but so far, 2023 has seen the lowest cancellation rate in the last 5 years, which translates to more people getting to where they needed to be as expected.
Now, he says if your flight gets canceled, you are entitled to a full refund unless you rebook. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Jess.
All right, Amy Morris, thank you so much. We appreciate it. Jess, the deal of the day yesterday was Nippon Steel agreeing to pay, I guess, $55 a share for United States Steel, U.S. Steel, and that was a whopping 142% premium for U.S. Steel relative to where it was trading before some deal activity. And that was the first question we asked yesterday of our guests.
That's
why
right.
such a premium? They're paying $14 billion for the company when I think the next bid out there from Cleveland-Cliffs was like, $7.5 billion. Why the differential there? And we didn't really get a great answer. And there's a great story out today from Bloomberg News, kind of getting some feedback from the marketplace. And there's not a lot other than people saying they really wanted it and they wanted to build this global company. And this is what you had to do if you wanted to do that. But boy, it's tough.
Also, a big bet on the U.S. economy as well as the future when it comes to steel needs here. And we've talked so much with our guests, as you know, Paul, about the trajectory of the economy in 2024. But when you see things like this, people are optimistic about where the economy is headed.
Yeah, I mean, again, when I looked at it, I said, okay, I get the strategy. I've got a bid out there from Cleveland-Cliffs. Let me top that bid. So do I go 8? Do I go 9 billion? No, I go 14 billion. So I just didn't see it at all, and I still don't have a great answer for it. But here's some numbers here. With earnings before interest and taxes, depreciation, amortization, that's what us pros call EBITDA, for the year, it's about $2 billion for U.S. Steel. Nippon's price for the company, including debt, implies it is paying the equivalent of 7.4 times EBITDA. U.S. Steel's peer group, made up primarily of American companies, including Cleveland-Cliffs, trades at around 6 times. So again, a pretty big premium there. But again, I guess it's in the eye of the beholder here. And I know some analysts are saying they might have to raise some capital here to fund this.
And analysts flagging how it's a pretty bold effort by Nippon Steel. So Japan's top producer, in what happened there, a shift in focusing abroad because demand at home was basically struggling there. So we can see potentially what this deal could mean for Nippon as far as trying to turn things around.
Yeah, so a good big deal for the M&A space right before the end of the year. So that's good news for the bankers, if nobody else. So again, a big price for an iconic U.S. asset. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to chat with Margie Patel, Senior Portfolio Manager at Allspring Global Investments, to get her thoughts about these markets for 2024 after what is turning out to be a bang-up finish here to 2023. Roberta Goss is going to join us as well in studio. She's the Senior Managing Director and Head of the Bank Loan and CLO platform at Pretium. Get her thoughts on these markets on the fixed income side. Private equity, private credit. I want to talk about the private credit market. Continues to see tremendous growth. And then the macro call, Adam Coons, Portfolio Manager at Winthrop Capital Management, will join us to talk about the market and some of the economic data he is looking at. Right now, let's kick things off with Mr. Charlie Pellet.
Thank you very much, Paul Sweeney. The Dow, the S&P, NASDAQ all advancing off session highs, but equities are advancing. Yields are falling after the latest signals from a Fed policymaker as traders bet that the central bank is on track to engineer a soft landing and start cutting rates. Again, the S&P off highs, up 17 now, an advance of 0.4%. Dow Industrials up 181, up 0.5%. The NASDAQ Composite now up 0.1%, 2,044 the ounce, and West Texas Intermediate crude oil is surging 2.1%, 74 for a barrel now of West Texas Intermediate crude. So what about the broader market outlook? Matt Stuckey is Senior Portfolio Manager at Northwestern Mutual, and he was a guest moments ago right here on Bloomberg Markets.
Certainly markets are celebrating, the Fed backing off in terms of this hiking cycle. Usually, whenever this happens, you do see broad-based asset class participation in terms of a move higher, whether it's fixed income, equities, currencies. And so we're in that environment now, but we do think that we're still more cautious as we think about the ultimate kind of lagged impacts as we move into next year.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. New home construction unexpectedly surged in November to a 6-month high, benefiting from a dearth of existing houses on the market and suggesting that the crunch in residential real estate is easing. Home builder shares, they're advancing today. Case in point, Toll Brothers up now by 1.7%, Lennar up by 0.6%, KB Home up by 2.3%. Recapping, S&P up 16, gain there of 0.4%, Russell 2000 up 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Jess Metton, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio.
Final hour.
Yes, final hour. Streaming live on YouTube, so head over to youtube.com. And we're now in your dashboard with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, it's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers. That's good stuff there. You can't miss us. Can't miss this market. Another strong day, as Charlie Pellet was just reporting. Lots of green on the screen. Let's check in with Bailey.
To bring in Bailey Lipschultz, star reporter, U.S. Equities team.
Yeah, we're seeing, I know we spoke about it a couple hours ago, seeing that breadth. We're seeing a number of names trading higher, about 80% of the S&P in the green. One thing to call out, though, when you're using the terminal, function for you, Paul. FTW, factors to watch. So this breaks down different groups and how they're moving. Short interest names, best performing group, they're up about 0.5% on the day.
That's a good function.
That is why we're seeing In-Phase Energy up 5%, First Solar up 4.2%, Estee Lauder up 4.3%. Investors really seem to be either covering those shorts or just trying to squeeze a bit of those shorts going into, as Jess loves to talk about, the Santa Claus rally time at the end of the week. So we are seeing maybe a rotation away from some of those the years bigger winners, looking at NVIDIA, bottom of the leaderboard today for the S&P 500, and covering some of those short bets. Looking at companies.
Well, I'm all over this factors to watch. On a year-to-date basis, growth has been the best performing factor. Trade activity has been the second performing. The worst performing has been volatility. If you bought volatile stocks, minus 27% return. Just interesting factors.
Yeah.
That's what some of the strategists talk about these days, factors.
And that's one of the things that we try to keep an eye on when we're looking at some of the wonky moves. So you say, all right, Enphase Energy, ticker ENPH, yeah, it's up 5%. It's off those job cuts. Well, let's actually look at what's driving the market. So if investors are covering some of these losers or covering those shorts, that's really why you're seeing the rally. Yes, the job cuts typically do drive stocks higher. Same thing with FMC, Corp ticker FMC, up 3% among the better performing S&P stocks. But it does seem like in a day that, broadly speaking, is relatively quiet from a micro standpoint, that's what you're seeing driving some of the action under the hood.
Also, since we last spoke with Bailey, he put out a story on the terminal, Fed pivot to rate cuts, raises optimism.
Radio and reporting.
Exactly.
Wow.
So quicker IPO revival potentially here on some of these rate cut bets. Walk us through the story.
Yeah, the big thinking, talking to bankers, we put out our big weekender on Saturday, looking ahead to 2024. Consensus, cautious optimism, obviously. As Paul knows, bankers get paid to be optimistic, and that's why they want some of these deals. But the big thing with this Fed pivot, talking to the head of ECM over at Mizuho, Josh Weismer, he basically called out to me that you could see a pull forward. Not necessarily that you're going to see gangbusters January or February, because typically 1Q is the slowest in terms of deal volume on IPOs. But if you were in the third quarter, maybe second quarter makes sense. I talked to the head of EY. They're kind of, when they talk to companies that could be going public, he basically said that companies that were on the fence about getting serious are now jumping over that fence. You're seeing the market rally, and now it's becoming a debate of if you can get ready by next summer, going into the election season, you should go.
I'm doing it now. What are the... I'm going back to my old...
I know, you could line these up. The big thing still is valuations, that valuation divide. If you're a public investor, you really have to be convinced to buy some of these stocks that last raise.
That is the big issue, yeah. But we've seen companies come out with down rounds, but I know it still really stings.
And that's one of the things we talked to the head of late stage growth at Wellington for lunch a few weeks ago, and he was basically saying they're having conversations with companies that before were not even open to having a talk about a perceived down rounder or getting some cash at a lower valuation. They're now starting to come around to that idea, because when you look at some of the growth stocks, when you look at something like the IPO ETF run by Renaissance Capital, everyone wants to point out, yes, it's at a 52-week high. It's trading around a 38 handle. It was north of 75 back in 2021. So we're still not at the level of the SPAC mania, the IPO mania. You look at Rivian, how much money they've lost for investors. So a lot of investors still feeling the burn from those pre-revenue companies.
Yep, very good. All right, Bailey Lipschultz, thanks so much for that. We appreciate it. Looking forward to some better IPO activity next year. All right, let's get some perspective here, because the move we've had in this market, really just since the end of October, has just been extraordinary. Again, north of 15% on the S&P 500. We need
small caps too. Looking at this, up over 20% in that span.
Yeah, great point, and it's been broadening out. Again, a small cap, the Russell's outperforming today. Margie Patel joins us. She's a senior portfolio manager at Allspring Global Investments. Margie, I'd love to get your thoughts on kind of what we've experienced just on this risk-on mood over the last 6 weeks. Did it take you guys by surprise?
Well, no, it really didn't, because all this year it looks as if the economy had been much, much stronger than people had been expecting. It's hard to believe that people actually were looking at a recession all during 2023, and it just didn't happen. And I think now they've even put it away, not even looking in 2024. And I think it shows that really the market and the real economy is a little bit impervious to Fed actions. Looking at the history books, Fed raises rates, the economy should slow down, unemployment should go up. And none of that really happened according to the playbook. And instead, because companies haven't been that leveraged, neither consumers, the growth was able to continue. And I must say, we all got a real lift from the incredible fiscal stimulus from COVID spending, rebuilding America, the infrastructure, and so forth. The deficits have really added to the economic growth over the short term. So there's really nothing wrong with the economy. So I think it should continue like this.
What are you advising your clients to buy and sell?
we still think the growth sectors broadly are where the better returns are going to be. So although I think it's likely that we should see the market broaden out in names more than this year, I think it's really going to be rather selective and not as broad as many people would like to see. So I still think technology is going to be the sector that leads. I think that industrials, just as they've been this year, are kind of a surprising stealth winner. I think they're going to continue to be one of the better performers, benefiting from capital expenditures, from global competitiveness, and the flexible cost structure that I says let me lead their profit margins continuing at these historically high levels. So I think those sectors will do pretty well.
Hey, Margie, I'm looking at the IN function on the Bloomberg terminal. It gives me my Bloomberg index browser, giving me some year-to-date performance across fixed income sectors. Finally, we all in the U.S. fixed income market, we have positive returns this year after a brutal 2022. But I'm really surprised to see the best returns in the fixed income space has been high yield. U.S. corporate high yield up 12.2%. With all that talk of recession, are you surprised that high yield's done so well?
No, I'm not. I thought high yield looked quite attractive. Defaults have been low. They're going to remain low. Companies have restructured the balance sheet, so they're not very vulnerable to the move up in short rates that the Fed has caused. And really, this year, the lower the quality, the better the return. The economically sensitive companies have done better. It's really parallel to what we've seen in the stock market, that economically sensitive, growth-oriented companies did well. In the bond market, high yield did better than investment grade, reflecting the fundamental strength of the economy.
Hey, Margie, something I'm curious about is, even though we've seen sentiment pick up, obviously, from what had happened with some of those seasonality factors in the fall, why do you think there still is skepticism among investors about the direction of the economy?
I think people are looking at the history books, looking at what Fed did in previous economic cycles and what happened, which is the Fed tightened. We had a recession, markets went down. Fed loosened, markets went up. And this time has been different because companies have not gotten over levered. There's no sector you can look at the economy and saying it's way overbalanced as far as way too much leverage in their systems and likely to have a downturn. And consumers too are in really pretty good shape. They got a big infusion during COVID, and the top, say, especially 2 quintiles are in very good shape. They have high savings. Unemployment is very low, so there isn't any sign in the economy to me where it had that vulnerability to cause a recession. So I think the Fed too is surprised, because to take rates from 0 to 5%, and basically you have a very robust economy, low unemployment, really isn't according to the playbook that the Fed thought, and most people thought, just looking at history. So I think that's why they're surprised.
And Margie, I'm just on the fixed income side. I'm looking at the 10-year Treasury at 3.9% here, and just like as Tom Keene would say a cup of coffee ago, call it late October, it was at 5%. So a big move down in yields for the 10-year. Where do you think that 10-year, is this where the 10-year kind of should be, or do you expect it to go lower? What's your call there?
I think it's more or less in a trading range. 390 is really pretty low for where inflation is, but I would say 390 to even say 4.5 is a trading range for the 10-year. And I think if the 10-year is in that range, which I think it will be with inflation coming down, that really supports the values, one, in corporate bonds, because yield spreads could actually compress and have a little bit of capital appreciation. And I think it says we'll have another surprisingly good equity year.
You mentioned some of the growth areas that you are anticipating to still continue to do well next year. I'm curious about maybe more granular and more specific, because if you look at chip makers, looking at the stocks right now, up more than 60% year to date, lost more than 35% of its value last year. How do you view chip makers and some other sub-industry groups within growth in their trajectory going into next year?
We still like the semiconductors. They have been extremely volatile historically. They continue to be volatile, but I think it's the price you pay for the higher return that they've provided over time. I think that fundamentally there's more demand for chips in all areas of the economy, and that will drive above average growth. I think we're coming out of an inventory cycle and having a quarter cycle of expanded demand with relatively low inventory. And plus with AI, I think that is going to be a real boom. Cloud, movement to the cloud, I think all those things will, and also industrials using more and more semiconductors. So we still think it's a growth industry, and we don't really look at the extreme volatility because we think for long term they're the best investment. So we continue to like them, and a lot of them now pay a reasonable dividend. So they aren't like the semis of old where they were negative cash flow and didn't pay a dividend. So we think all around they're pretty attractive.
So, lastly, Margie, just China. It's been such the forefront of a lot of discussion this year. The growth has been slower than expected. How do you guys, I guess, either play China, avoid China? How do you guys approach it?
We're cautious on China and think that the long-term growth is headed down, and there's nothing they can really do about it. There was a time a couple of years ago where the growth would never be below 6%. We've already transitioned out of that. And you look at an economy that had at its peak something like 28% of GDP for housing. Now it's about 18%. Think about that in an older, declining population society like China. I think our housing is give or take around 5% or so. So you can see the difference. And about half of their economy is export driven at a time when exports, I think, are really suffering under lower economic growth and a trend to reshore economic activity back. So I think China has really seen its best days and is really going to struggle. So we have really tried to avoid companies that have a big exposure as growth is concerned.
What other areas in the stock market are you telling clients to avoid that maybe you think are too risky right now?
Well, I don't know that there's a lot of risk in the market because, as I said, companies are in good shape. The U.S. economy is in good shape. Interest rates are such that it's really a neutral to positive factor. So I think that really any company that's well positioned, I would say we don't particularly like a lot of the commodities because we think that a lot of the commodity growth was driven from the emerging markets and from China. And we think that's in a long-term downtrend. So we're pretty lukewarm on those. But other companies that can have innovation, no matter what the sector, we think will be attractive. And I do think, as I said, the market is still going to be selective, not as much perhaps as this year, but we don't think we're going to see a huge broadening out to sectors simply because we think growth, even in the U.S., is going to be pretty modest, maybe 2 or 3%. So that says the emphasis is on high-growing companies still.
All right, Margie, thank you so much for your time. Always appreciate getting your thoughts. Margie Patel, Senior Portfolio Manager, Allspring Global Investments, giving us her thoughts on these markets, cautiously optimistic into 2024. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. It's a victory in court for Kenvue. The maker of Tylenol won a lawsuit claiming that when taken on a prenatal basis, the drug can cause autism and attention deficit disorder. Bloomberg's Abigail Doolittle has analyst reaction.
JP Morgan analysts are saying that this is, quote unquote, a clean sweep for the defendants and that it, quote unquote, effectively collapses the plaintiff's case in the multi-district litigation. Other analysts, though, say that the possibility of a lawsuit dismissal, because Kenvue is saying that they are going to seek that the case is dismissed, reduces but does not eliminate the litigation risk, mainly because there could be a lengthy appeal process.
Kenvue is up about 3.5%. Weight loss drugs, well, they're all the rage, and Amgen certainly knows it. The biotech was upgraded to outperform at BMO Capital Markets because of its potential in the obesity drug space. Bloomberg's Katie Greifeld has details.
Analysts there saying that Amgen, quote, has unappreciated potential when it comes to the obesity drug market and that the biotech's developing pipeline gives investors the opportunity to play in this space without paying the same premium that you'll find when it comes to Amgen's peers here. Now, as a result, BMO says that Amgen may be the 2024 value obesity play.
Now, Amgen is up about 1%, and it's a success for Blue Origin.
We have ignition of our BE-3 engine. And liftoff.
Yes, Jeff Bezos' new Shepard rocket has blasted off to space carrying a number of research experiments. The launch was canceled yesterday after an issue with the ground system. It's the company's first flight in 15 months after an in-flight failure last year. Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains. S&P up 16 right now to 47.56. That is a gain of 0.3%. Federal Reserve Bank of Richmond President Thomas Parkin is suggesting the central bank will cut rates if recent progress on inflation continues, but says he is still looking for conviction that inflation is heading back to the Fed's 2% target. The Dow up another 161 points, up 0.4%. NASDAQ is up 46, up 0.3%, while the NASDAQ 100 index had a record up 40 points, a gain there of 0.2%. 10-year yield 3.91%, with the 2-year that's yielding 4.44%. Spot gold up $14 the ounce now to $2,041, up 0.7%. And West Texas Intermediate crude is up 2.1%, 74.01 for a barrel of WTI. After the bell, we'll be hearing from FedEx. It is expected to report its adjusted earnings per share jumped 32% from a year ago on cost cuts and spurred by the ground unit, where the courier has been able to raise prices and grab some customers from its main rival, UPS, during UPS's tense union labor talks this summer. FedEx shares ahead of earnings down 0.2%. UPS shares down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Jess Met and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. Early in my career, Jess, I was at the Chase Manhattan Bank. I survived their credit training program, which is the best on the street, still is. And we were in the media group, so we lent not against assets, not against like receivables and stuff like that. Cash flow, baby. Leverage lending. That's how we did. We go up to 6 times leverage lending on some of these stupid things. We did Fleet Call, which was, we gave them $500 million, and we went to our credit committee and said, we want to lend them. They have no assets, no cash flow, no revenue, but they have air. So we were lending against air.
Wow.
We got that deal done. So I love the leverage lending business. Roberta Goss joins as Senior Managing Director at Pretium Partners. I have no idea what Pretium means. What does Pretium mean?
Pretium means value.
Value?
Ooh.
Yes.
In Latin, we'll go?
Yes.
Good enough for me. How do you guys, talk to us about 2023 and kind of the credit market, because I'm looking at across a lot of fixed income positive returns this year,
Yes.
which is good versus 2022 when it wasn't so much. But how do you view the credit markets out there?
So we've had a pretty volatile 2 years, but 2023 very strong across the board for leverage credit. Leverage loans as of now up almost 12.5% after effectively a flat year in 2022. Most of that coming from the absolute yield. So, all loans are floating rate, and so the base rate at over 5% provides a lot of carry in the current market. I think as we go forward into 2024, it's going to be, a different type of year in terms of earnings and dispersion across the board in terms of credit selection.
Talk to us more about the earnings picture. What do you foresee, and where do you see areas of weakness? Where do you see areas of strength?
Sure. So as we've gone through 2023, and in particular Q3 earnings, I think surprised to the upside. And that's not surprising as we look back with very strong GDP numbers here in the U.S. I think as we go into 24, we're going to see more differentiation. What we've seen over the last couple of years is normalization as we've dealt with inflation factors, be it supply chain, labor, and just cost of inputs. I think as we go through 2024, and the U.S. consumer is going to play a big part in this, does that start to impact top line? We've had very strong top line for the last couple of years. Margins have been all over the place. But I think, we're going to have, some sort of slowdown in the top line. And the degree to that slowdown is what's going to be most impactful.
Private credit.
Yes.
I knew this was coming.
How do you guys interact with the private credit business?
Right. So we're focused at Pretium almost exclusively on the broadly syndicated market. I think that's...
So you buy loans from banks?
From banks.
So I would do my Chase Manhattan Bank. I'd syndicate 90% because I don't want to take any risk. I'm in the business of generating fees.
Right.
So I would sell it to you.
Yes.
Nice.
And so private credit's now creating more competition for the likes of JP Morgan. For sponsors, what they're prepared to do is pay up for certainty of execution. And that was very important in 2023 when the broadly syndicated market was, pretty much shut for parts of the year.
Why was it shut?
We've seen substantial outflows and CLO creation, which
collateralized loan obligations
represent about 3/4 of the buying base for broadly syndicated loans, and issuance was slow to start this year. So the private credit market generally costs sponsors about 200 basis points more in terms of,
Then why go there? Because I can't get a bank to do it?
Certainty of execution.
Okay.
And I think that started to shift as the broadly syndicated primary markets opened up and is quite strong right now. So I think the sponsors want both markets, and I'd include high yield as well, to be, accessible.
Are you surprised that the banks have allowed that business to walk across the street? I never would have done that.
Yeah, I think they've been surprised as well. So private credit now is comparable in size at $1 trillion plus to high yield in loans. I think the banks are playing catch up in terms of what role they have in that market. Yes.
Private debt was thought to be really pressured as rates were going to rise, but that didn't happen. Walk us through why that didn't happen.
Yeah, so I think that one thing with private debt that we've experienced, or not experienced, but seen over the last few quarters is they're very aggressive in terms of terms. And as rates have risen, and I think some of these companies and multiples that sponsors are paying, they're having a hard time dealing with the increased interest cost. And so we're starting to see, and this I think is scary, and I was also trained at JP Morgan.
Nice.
So
there you go.
Goes back to my training days. First lien PIK loans.
Oh boy.
16% first lien PIK. That
payment in
kind. Yes, is put in place because they don't have the cash flow to service and cash interest. I think setting up for volatility in the future, but as purely a function of where rates sit today.
How do you think the 2024 deal market will be, ergo the kind of the stuff that you guys are going to see coming out of the bank syndication?
Yeah, I think we're going to see a real pickup in primary activity next year. I think the biggest factor this year has just been the gap between buy and sell side multiples. I think that's started to contract. We've started to see M&A pick up. I would expect that to continue next year. And I think as our market continues to remain open and is active, you'll see a resurgence of.
Are you guys at Pretium raising capital now?
Yes.
Yes.
We are raising capital across all products.
And what's the pitch here? Like, what's the reason that you guys
right? So we think that next year we're going to have a lot of dispersion, and that credit selection is going to be a big differentiator among performance. And I think this goes to sector selection and individual name selection, and that's our strong suit. Yes.
So, looking at credit, what do you think this tells us about economic growth?
Well, I think as we saw in Q3, earnings were, continued to be strong and actually accelerated from the first half. I actually think the U.S. economy is doing quite well. And that's what we've experienced in pretty broad-based industries.
What would you need to see in the credit space to raise any sort of red flags to you? I mean, it seems like you're not seeing those yet, but what particular indicators would you need to see for then kind of alarms go off in your mind as far as growth stalling out?
Yeah, so what we haven't seen is a deceleration of the top line, and that, to me, is a function of strength in the U.S. consumer. We've seen a deceleration of growth to some degree, but not negative growth year on year or quarter on quarter. I think we'd need to see that in a more broad-based way across consumer-driven sectors, which we haven't seen at all.
Interesting. Roberta, thank you so much for joining us. Roberta Goss, she's a Senior Managing Director at Pretium Partners, which again means...
Value?
Value, thank you.
I was listening.
Some new language, yeah, maybe one ear and other ear. So we appreciate it. Leverage loan business. I love that business. I'll go 5 to 6 times leverage, no problem. Net debt to EBITDA.
We know how much you
Then the
love
high yield
private
knuckleheads can go on top of me. I don't care. S&P 500 up 0.4%. NASDAQ about the same. Again, the outperformance here today relative among the indexes is the Russell Small Cap up 1.5% today. So again, good dispersion there, as the kids say. Right now, let's head down to get, I guess, world and national news. Scott Carr is going to be there for us.
Tonight's ball, a funeral for former Supreme Court Justice Sandra Day O'Connor is underway at Washington's National Cathedral. Among the speakers, President Joe Biden offered words of comfort for her surviving children.
I hope you find the strength in knowing that your mom and dad are together again this December, gathering roses in winter once again as great Americans, both great Americans for all seasons.
O'Connor became the first woman to sit on the bench on the High Court after being appointed by President Reagan in 1981. Jeff Bezos' space company successfully launched a rocket carrying experiments today. Its first flight since engine trouble caused a crash more than a year ago. The New Shepard rocket blasted off in West Texas, lifting a capsule full of tests, many of which were aboard the failed launch in September of 2022. No one was aboard that flight or today's. This time, the capsule made it to the fringes of space, exposing the experiments from NASA and others to a few minutes of weightlessness before parachuting back down to the desert. Crews are still at work across New England trying to restore power to hundreds of thousands. The region was hit with high winds and a deluge of rain last night, knocking down trees and power lines and killing at least 4 people. Flooding remains a concern today as transit systems face numerous delays and cancellations. Millions of student loan borrowers are still not making their payments after a 3-year pause. Payments on federal student debt officially started again in October, 3 months after President Biden's one-time forgiveness plan fell through. Yet 40% of the 22 million borrowers who had bills due did not make their payments by mid-November, according to the U.S. Department of Education. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Tuesday rally continues, as it has for the past 7 weeks. Another up day with the Dow, the S&P, NASDAQ all advancing. 18-point gain right now in the S&P 500 index, up by about 0.4%. Yes, off-session highs, but holding on to gains. The Dow up 169 now, up by about 0.5%. The NASDAQ Composite Index up 60. That is a gain of 0.4%. 10-year yield 3.91% with a 2-year, 4.43%. Spot gold up $14 the ounce to $2,041, up 0.7%. And West Texas Intermediate crude up 1.5% right now, $73.58 for a barrel of WTI. The NASDAQ 100 index continues to climb to another record, helped by the so-called Mag 7. But what about broadening the rally? Robert Teeter is Chief Investment Strategist at Silvercrest Asset Management, and he was a guest earlier today right here on Bloomberg Markets.
The likely scenario in my mind is that the sevens still continue to keep pace, driven mainly by the earnings side. They've got strong earnings potential. That should continue. But small caps will catch up. They've been out of favor for a long time. There's a lot of valuation pressure. That's closed the gap a bit in the last 6 weeks, but I think still more room to go.
And speaking of small caps, Russell 2000 outperforming today, up by 1.5%. New home construction unexpectedly surged in November to a 6-month high, benefiting from a dearth of existing houses on the market and suggesting the crunch in residential real estate is easing. Residential starts increased 14.8% last month to a 1.56 million annualized rate. Home building stocks, they are advancing today. Among some of those names that are showing gains today, we have got Lennar shares. They are advancing. Lennar moving higher now by just about 0.9%. Toll Brothers up 2%. KB Home up by 2.3%. Recapping, S&P now up 17, gain there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Mitten and Paul Sweeney here in the Bloomberg Interactive Broker Studio. Want to get straight to our next guest, Adam Coons, portfolio manager from Winthrop Capital Management, joining us on Zoom, back with us. I want to get your thoughts, Adam, because you look at the S&P 500 within striking distance of an all-time high, which last was set almost 2 years ago. You look at small caps, looking at the Russell 2000 today, up around 1.5%. How do you view the market, and will the S&P 500 hit an all-time high heading into year end?
Yeah, I mean, I think you gotta follow the momentum right now. There's nothing that's going to really stop equity markets from going up, and valuations are getting a touch stretched, but they're by no means vastly out of line. I think until we start to really see holiday shopping numbers come through, that's going to be what might be the tipping point for equity markets. But I think we're not going to see that really start to flow through till the first of the year. So we do think we're going to continue this momentum. A lot of people call it the Santa Claus rally going into the end of the year. But then we also think on the flip side, as we roll into the first of 2024, then we'll start to see volatility begin to pick up, more uncertainty around Fed policy, and then where valuations are ultimately going to matter more for stock markets.
Do you have any concerns here on valuation, Adam? Again, such a big move in the market here to end the year. Does that ring any valuation bells for you?
I mean, it does. I mean, we do think that equity markets have overextended themselves. We just see this as a point where there still is some room to run, because, like I said, we just don't see any natural headwinds here between now and the end of the year. But those concerns around valuation will matter more, as I said, as we get into the first of the year, and the debate around what interest rates are going to do or not going to do, and then what the global economy is doing. All those things will start to become, more a narrative that will, like I said, increase volatility.
Talk to us about what your highest conviction trade is.
Yeah, so for us, it kind of to the other side of that is fixed income. We do really like long duration fixed income right now, as particular because this is a point in time where you can still get above 5% with a longer maturity portfolio, and lock that in for a long period of time, and ultimately, we do think interest rates are going to come down. Regardless of how quickly the Fed drops interest rates, we do see the long end of the curve continuing to come down. You've seen a tremendous move over the last 30 days at a 10 and 30-year bond. So we think that that's going to continue. And so this is that point in time to really lock in that yield. And so for us, it's getting that carry of, like I said, 5% type coupons. And then eventually we will see interest rates come down, and you could see, big price moves out of bonds. If you look back in 2019 or 2020, 30-year treasuries were one of the best performing assets. They were up 20%. So we're looking for that type of move. That's why it's our highest conviction is the extend duration across portfolios.
Yeah, it's kind of where I wanted to go, Adam, on the fixed income side, because we now have the fixed income market across the various asset classes now firmly in positive territory here for 2023, which is such an improvement over the disastrous declines of 2022. What is your 24 call here on the fixed income side? I was actually surprised to see high yield as the best performing asset class in fixed income this year. How do you guys think about next year?
Yeah, so next year, it really is, we like the higher quality trade next year. So high yield did have a good year this year. Because our thesis is on the heels of the economy beginning to roll over, that's why we are moving out of high yield and going up in quality, but then extending duration as the offset to that. So we're looking at, your treasuries, obviously your highest grade bond you can buy, but we're looking at corporates where you're getting single A type paper, like I said, with a 5% yield, 10 and 30-year maturity. And we see really the 10-year. We do think that there's a high likelihood we're back at 3% on the 10-year in 2024.
How will the potential for rate cuts end up impacting longer duration when it comes to fixed income?
Well, there's two different ways it could impact. The first, more obvious, is that you could, the economy starts to slow down and the Fed does cut rates, which would uninvert the curve, and you could see some, steepening simply because the short end has come down, and that would drag long-term interest rates down with it. But conversely, you could see the Fed take this higher for longer stance, where maybe they don't actually move towards the end of the year, but we still think that long-term interest rates, those 10-year and 30-year bonds, the yields on those would still come down, because if the Fed's doing that, it is going to tighten the economy even more, which might create that hard landing that you're hearing about, and that basically would push long-term interest rates down as the outlook for economic growth would come down with it.
So I guess one of the questions for a lot of folks, just as a backdrop, is a recession. You guys, what's your call there?
Yeah, so the recession call is difficult. We're in the camp that there will be one, but it will be a more mild or softer type recession, one that isn't, going to completely undo the business cycle. I think we'll kind of see different sectors be affected at different times. And in some ways we see that and we think that the tech sector kind of already had that moment. And that was, last year when it had its negative returns, and the tech is more forward looking. So it was trying to price in that recession. We think that's already done. But now you're starting to see other sectors like energy start to try to price that in. So what we see is that, yes, there will be a recession, it'll be mild, and the effect it has on either equity or fixed income markets will really be sector dependent, as we kind of see these different reshuffles and whatnot through portfolios.
Hey, Adam, thanks so much for joining us. That's Adam Coons. We always appreciate getting his perspective. Adam Coons, he's a portfolio manager, Winthrop Capital Management Group here. And again, another good day here for stocks.
Yeah, Russell 2000 up 1.5% today.
Yeah, absolutely. I was just looking at the NASDAQ 100 up over 50% year to date.
Right.
Wow.
What a run.
Wow.
So that's the whole thing when we've talked so much about money market funds and then talking about yields there when you're looking over at the indexes, S&P 500 NASDAQ 100 up double digits.
Double digits.
2023.
Yeah, extraordinary growth. And again, a big rally here into year end. And we'll certainly stay on top of that. We're going to have more to come. This is Bloomberg. Good afternoon. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Xfinity customers, well, they may have had their personal information hacked. We get more on this story from Bloomberg's Steve Podisk.
Comcast says its Xfinity systems were hacked between October 16th and 19th. The cable, broadband, and phone service provider says the unauthorized access led to customer information likely being acquired, including usernames, hashed passwords, contact details, and the last 4 digits of social security numbers. Xfinity is requiring customers to reset their passwords to protect affected accounts.
Comcast is little changed. Amazon could bring more sports to its Prime Video. Bloomberg's Steve Rappaport has more.
Amazon is in talks with Diamond Sports Group and some of its creditors to invest in the bankrupt regional sports broadcaster and partner on streaming. Sources tell us the potential deal would give Amazon multi-year streaming rights to professional baseball, basketball, and hockey games.
Now, from streaming to AI, back in August, Amazon began using artificial intelligence to convert billions of reviews into brief summaries. Well, it turns out the results weren't perfect. Some wound up giving an inaccurate description of a product, and others exaggerated negative feedback. And that's bad news for merchants who rely on positive reviews to boost sales. Right now, Amazon down about 0.2%. And Amazon and UPS do it now. FedEx, allowing customers to make returns without a box or shipping label. It's taking place at more than 10,000 locations, including 2,000 FedEx office stores. Now, FedEx actually reports after the markets closed today. Investors are curious to see if the company benefited from contract negotiations with UPS and the bankruptcy of Yellow. Those are the stories we're following. I'm Lisa Mateo. This
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we are looking at these markets, and they continue to be strong here. The S&P 500, the Dow, both up, and the Nasdaq, all up about 0.5% here. And again, the small cap stocks continue to be the outperformers, with the Russell 2000 up 1.6% yields. They come in just slightly. The 10 years now at 3.91%. WTI crude oil up 1.5%, $73.50 a barrel there. So we'll continue to keep an eye on these markets for you. Right now, let's get world and national news, and we do that with
Scott Carr.
There you go.
Thank you, and good afternoon. President Biden among those honoring the late Supreme Court Justice Sandra Day O'Connor. He delivered remarks at her funeral at Washington's National Cathedral today and described how the late Supreme Court Justice viewed the High Court.
To her, the Supreme Court was bedrock, the bedrock of America. It was the vital line of defense for the values and the vision of our republic.
O'Connor became the first woman on the Supreme Court after being appointed by President Reagan in 1981. She died earlier this month at the age of 93. The Teamsters are authorizing a nationwide strike against Anheuser-Busch. Union leaders say their members will strike when the current contract expires in late February if the company fails to come to the negotiating table before then. The union says there have been a couple of issues agreed to by both sides, but there have been no more talks over the past month, and no more are scheduled. Increases in wages, job protection, and retirement benefits among the issues still up for discussion. The Transportation Security Administration says it expects airports to be very busy the next couple of weeks for the holidays. The TSA predicts a 6% increase in travel at airports nationwide compared to last year on the 3 busiest travel days of the holiday season. The TSA says that'll be Thursday, Friday, and New Year's Day. TSA officials are urging flyers to not bring any wrapped gifts, since officers may need to unwrap them at checkpoints. The agency also says homemade preserves are under the category of liquids and would have to go into checked baggage. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Paul.
All right, Scott Carr, thank you so much. We appreciate that. Jess Minton, Paul Sweeney here with you in Bloomberg Interactive Broker Studio. You know, Jess, we've been talking in recent conversations with Jen Rhee, who covers antitrust law on Bloomberg Intelligence. It's become clear that it's tough to get deals approved by the regulators.
It is.
And the latest one is some news from yesterday. Adobe walked away from its $20 billion acquisition of startup Figma after clashing with regulators in Europe and the UK. Adobe will pay Figma a $1 billion termination fee, the company said in a statement Monday. They saw no clear path to getting regulatory approvals from the European Commission and the UK's Competition and Markets Authority. Adobe, the dominant force for years in such creative software as Photoshop and Illustrator, announced a purchase of Figma in September of 2022.
The acquisition, which would have been one of the largest takeovers ever of a private software maker, was a massive bet that more creative work will be done on the web. If you look at Adobe stock this week alone, ADBE is the ticker symbol on this. Today, up more than 1%. This week alone, up about 4%. If you look at year to date, up 80%, wow. Paul.
And here's a great note from Wall Street. No Figma, no problem. Was the title of a note by Evercore ISI analyst Kirk Materne. I actually know this guy's father from back in the day at Penn Weber, big bond trader Penn Weber. Adobe is in a much stronger position now than when the deal was announced due to its investments in generative artificial intelligence, Materne said, and walking away from the deal frees up cash for share buybacks.
Yeah, it's really interesting just putting the context into all of this. So Wall Street had largely been lukewarm on the deal due to its high price tag, while Figma would have helped Adobe reach new customers, though some saw the valuation as revealing severe competition pressures.
Yep. So Anurag Rana, an analyst at Bloomberg Intelligence, said the termination fee doesn't change Adobe's dominant position in the creative software market. So there you go. S&P 500 up 0.4%. Russell up 1.6%. So the small cappers playing catch up here. Sound On with Joe Matthew from Washington, D.C. That starts right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
So is that it for 2023? Welcome to the fastest show in politics as senators put one foot out the door after failing to reach a deal on the border or government funding for that matter. So it's on to a wild January in politics as we will discuss ahead with Congressman Ami Bera, the Democrat from California with us, serves on the House Foreign Affairs and Intelligence Committees, and will weigh in on what's happening in the Middle East and Ukraine as our conversation begins in just a moment. A new poll out shows Joe Biden losing young people over Israel. And Donald Trump launches his first ad attacking Nikki Haley. It's on. We'll talk out all these stories with our panel today. Jeannie Shanzena was with us, Bloomberg Politics contributor, Democratic analyst, along with Republican strategist Lester Munson from BGR Government Affairs. So let's get started on the Tuesday edition with a look at Wall Street. We go to New York, get the latest from Charlie Pellet. Hey, Charlie.
Hi, thank you very much. Let's get started indeed with the Dow, the S&P, and NASDAQ all advancing, holding on to earlier gains. 20-point jump right now on the S&P, close to session highs. We're up by just about 0.4%. We've got the Dow up 190 now, higher by 0.5%. NASDAQ, the composite index, up 63. That is a gain right now of just about 0.4%. Cannot ignore the Russell 2000 today, up another 31 points, outperforming, up 1.6%. Small cap shares ripping higher. And yes, a record for the NASDAQ 100 index, up 55, up by about 0.3%. 10-year yield 3.92%. We've got the 2-year 4.44%. Spot gold up 0.7%. 2040 the ounce. Crude, major story today. A lot more coming up on Sound On. West Texas Intermediate crude up 1.5%, 73.58 a barrel. Politics and the Federal Reserve. Jason Trennert is Chief Investment Strategist at Strategas Research.
Next year also is an election year, and my interactions with the Fed have always been so positive in terms of their intentions. I think as an institution, I've always felt that the Fed, more than any other Republican or Democrat administration, is almost always trying to do the right thing. And now there are real questions among our clients as to whether the Fed is playing politics. That may be unfair, but that is certainly the perception out there in the institutional investment community.
And that certainly sets us up for Sound On. Hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. New home construction unexpectedly surged in November to a 6-month high. Home builder shares are advancing. Case in point, Toll up now by 2.1%. Lennar up 1.1%. KB Home up 2.5%. Recapping an 18-point jump right now for the S&P 500 index, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Great to see you. Welcome to the Tuesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where there are a couple of us left. 61 senators showed up for votes last night, 17 of them Republicans. We're done here. Appears to be the signal. John Thune talking with Bloomberg. Not going to happen, he says, about a deal potentially on the border that kept everybody here over time. The quote he gave to CNN, no way on a Ukraine border deal, even a cloture vote apparently happening this week. The Democrat at the negotiating table, Chris Murphy, still somewhat optimistic, bringing us up to date on this seemingly endless saga.
I know it's maddening to hear us say we continue to make progress without a product. That is in part because of how difficult this set of law is. And even when you have an agreement in principle, writing it and coming to an agreement on the writing is hard.
There is that matter of writing the legislation, but we can't even get to a deal. And Mitch McConnell says, it's going to take a while to read this thing when you guys get done, so we're looking at next year. Here's the minority leader.
Senate Republicans will not
make up for others showing up late to the table by waiving our responsibility to carefully negotiate and review any agreement before voting on it.
With the headline on the terminal, Senate Republicans shut door on quick Ukraine aid border deal. And that's where we begin our conversation with Congressman Ami Bera, the Democrat from California 6th, back with us here on Bloomberg Sound On. And Congressman, it's good to see you. I'm glad you're with us. I wonder, from what you're hearing as a member of the House through the grapevine, this is all over, right? There's no 11th hour Christmas miracle kind of a deal that's going to emerge this week on the border.
You know, Joe, thanks for having me on. I think it's unlikely that there's anything before the end of the year, but, you know, we just heard Senator Murphy from Connecticut, talk about it. I do think there is progress, and I think we should have a deal that first week of January that when we get back. So.
Well, my gosh, very optimistic, knowing that, Congressman, it's not just been this battle. This has been a debate for the better part of 30 years on Capitol Hill, and it's been walked up to the line more than once, and it never became law. What is different this time? Is it the urgency behind Ukraine that brings Democrats to the table in a way that did not before?
Yeah, I think it's the urgency to continue to support our friends in Ukraine in their battle against Vladimir Putin. I think certainly the Israeli support is important as well. In addition, I think it's important for us to get humanitarian aid to Gaza and the Middle East, and certainly to Ukraine. But the crisis on the border is very real, and I think many Democrats understand that we have to do something to strengthen our border security, get through the backlog in asylum cases, et cetera. And I think the one big difference is, the president and his team is at the negotiating table right now, and I think that's going to be helpful.
Do you have a sense, not being in the room, I realize, John Thune's not in the room either, but to the extent that you're hearing about this, what the sticking points are, because you do have a Democrat in Chris Murphy at the table. Kyrsten Sinema, now an independent, former Democrat, though, good at making deals, is at that table. And James Lankford appears to be a credible negotiator. With the White House now involved, where does this come down to? Is it defining asylum law, or is it more granular?
I think it's a little bit of everything. So on the House side, I hear my Republican colleagues really saying you've got to take H.R. 2, which is their House immigration bill. That would be a non-starter for most Democrats, if not all Democrats. But there are elements in H.R. 2 that you probably could take. That'll mean you'll lose some of the Freedom Caucus folks, some of the far right. On our side, we will have to make some changes to the asylum laws and so forth. That'll lose some of our most progressive members, perhaps some of the members in the CHC, the Congressional Hispanic Caucus, which requires moderate Democrats and Republicans to come together and put a deal together. And I think that's where the sticking point is. I think it is helpful that the president is kind of laying out how he sees the border. And I think he recognizes that it is a real issue. And you're seeing big city mayors who are also grappling with a lot of these asylum seekers who are going to Chicago, New York, et cetera. We've even had some come here to Sacramento and, trying to figure out, okay, how do we manage this?
Well, this all, of course, means a longer wait for Israel and Ukraine, for that matter, Taiwan, the supplemental funding request that would be tied to a border deal. Congressman, you're hearing a lot more than most as a member of the Foreign Affairs Committee, as I mentioned, the Intelligence Committees. How worried are you about Ukraine as we go into this new year, not knowing when funding will resume?
I think it weakens our standing in the world that we didn't get the supplemental done. That said, the fact that we did get the defense authorization bill out of the House and Senate, and the president should sign it this week, that does have funding both for Ukraine. There's ways to continue to support Israel. It also does have funding for Taiwan and a pretty large amount in there to help make sure our friends in Taiwan can continue to defend themselves. That said, we don't have a lot of time, and I hope one of the first things that we do when we get back in January is take up the supplemental bill with Ukraine funding, with Israel funding, with humanitarian aid, with Indo-Pacific funding, and with border security, and get that done. So I'm confident the folks in the Senate are going to continue working through the holiday. We're ready to weigh in on the House side as we need to. And then hopefully, as soon as we get back, we have that ready to vote.
Spending time with Congressman Ami Bera here on Bloomberg Sound On. I have to ask you about the hot war underway between Israel and Hamas at the same time, realizing this is less of a money issue or a funding issue, and it's become a very divisive political issue for Democrats, for this administration supporting Israel in what some see as a disproportionate response to what happened on October 7th. We talked about this a couple of months ago, Congressman, and I wonder where you are now. We have a new poll out today from the New York Times and Siena, and it's showing problems consistent with other polls for Joe Biden, particularly among young people. 18 to 29-year-olds disapprove the way that the president is handling this conflict. Where are you right now?
Yeah, so obviously the acts that took place on October 7th were heinous, and what Hamas did, Israel will prosecute a war against Hamas. But all the video imagery of innocent civilian lives, the humanitarian crisis that's unfolding in Gaza, is also taking a toll. And I think a lot of young people are seeing these images on TikTok, on Instagram, et cetera, and it is making them question what we're doing in Israel. That said, it is really complicated. We'll stand by our allies in Israel, but as friends sometimes have to do, and I think you're seeing the president, Jake Sullivan, and others really messaging to the Israelis that it's time to start wrapping up this phase of the war. They'll continue to prosecute a campaign against Hamas, but let's do it in a more precise way using special operators, et cetera. And let's shift now to saving innocent kids, innocent older folks. There's a humanitarian crisis unfolding, lack of food, lack of clean water. My staff was talking to Doctors Without Borders. They don't have antibiotics, and so many people are dying just of secondary infections. And that's not war. That's entirely preventable. Let's save those lives.
There's an important headline I was just reading on the terminal here. The president of Israel, Isaac Herzog, telling ambassadors from around the world that they are prepared to agree to a second pause, a second truce, if it means the return of more hostages held by Hamas. Is that a realistic overture at this point? I know the CIA director is back abroad. He's in Warsaw right now working on a potential truce. Will that happen potentially over the holiday here?
I certainly hope so. I mean, that would be important to get the hostages back. And then as part of that truce, to get needed food, antibiotics, medications, fuel to run the remaining hospitals that, I don't think there's that much left. Clean water. I mean, these are, folks are going to die of starvation, die of diarrhea, et cetera. And those are lives that we can save. And I say that as a doctor. Again, Israel will prosecute this war, but if we can get a humanitarian pause, if we can get some of the hostages back, and if we can save some of these lives, that would be great.
You are a doctor, a former practicing physician, the former chief medical officer for Sacramento County, Congressman. When the gates finally open again and humanitarian aid can move into Gaza, what is it they will need most?
They will need clean water immediately. 96% of the water in Gaza, as I'm told, is undrinkable. And just the amount of folks that are getting cholera, getting treatable infectious diseases, and then starvation. I mean, you're hearing really bad reports that they're running out of food in Gaza. And again, the aid trucks are there. We just have to get more crossings open, get that aid in there, make sure it's getting to the civilians and getting to the right folks. And again, I think everyone's ready to step up. We introduced a resolution last week to really encourage the president to continue to push for that humanitarian aid.
Mm-hmm. In the meantime, we've got a very serious situation in the Red Sea. As we hear the defense secretary announcing this new maritime task force to protect commercial vessels, many of which have stopped traveling through the Red Sea due to these persistent attacks from Houthi militants in Yemen. To what extent will this task force make a difference, Congressman? Is this something your committee is focused on?
It is. And again, I think the president very early in this conflict was decisive, moving assets into the region, aircraft carriers and other support assets to make sure this conflict didn't broaden. We've talked to our friends, the Saudi foreign ministers in Washington, D.C. last week, as well as the foreign ministers from Qatar and Jordan and Turkey, meeting with Secretary Blinken, but also met with us on the House. And, along with trying to figure out how to end the conflict in Gaza and the day after, we did discuss how to continue to keep these maritime straits that are super important in terms of commerce open, how to make sure, we kept the Houthi rebels out of this. And, it is something that we're actively thinking about.
Is the U.S. going to strike targets in Yemen, go to the source to stop this from happening?
Again, that might be one way to stop it. Right now, I think, we're protecting the ships and doing what we have to do. But if this escalates, I can certainly see a scenario where we have to go to the source and address that at the root cause.
It's pretty important. I wonder, as you talk to Democrats in the House, to Democrats, even more so in California, and as I mentioned, younger Democrats, as we've seen, 18 to 30, 18 to 34, depending on the poll, who say we need to stop funding this action by Israel. Is there a line that Bibi Netanyahu could potentially cross that would cause that to happen?
I'm not a Netanyahu supporter, and I think he's made some real grave errors that have led us to where we are today. When I talk to some of my Palestinian American constituents who have lost relatives, friends, and it's heart-wrenching as well, just as when I talk to some of my Israeli constituents and Jewish American constituents. How I approach it is that the Israelis need to do everything that they can to minimize innocent civilian lives. And I think it's a reasonable question to ask how they're prosecuting this war, and see if they can do it in a more precise way. War is horrible, and we're seeing the horrors of war. The other thing that I say to young people is the one thing we can do is make sure innocent civilians don't die of starvation, of lack of clean water, lack of access to medications. That's not war. That's compassion and humanitarian aid. And that's something that I really do push the Israelis to allow more crossings to open and to get that aid in there to prevent people from dying from eminently preventable causes.
Congressman, I feel like I should call you doctor. It's great to see you again, Ami Bera. Thank you for joining, and I hope this holiday season is great for you. Happy New Year. I hope we'll see a lot more of you in 2024. From California's 6th to Sound On, Ami Bera will assemble our panel next. Jeannie Shanzano and Lester Munson. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Equities are pushing higher. The Dow, the S&P, NASDAQ 100 index, all in the green. NASDAQ 100 index, another record there, up another 39 points, higher by 0.2%. S&P up 17. We're off session highs, still up by 0.4%. Dow Industrials up now by 195 points. That is a gain of 0.5%. 10-year yield 3.92% with a 2-year that's at 4.45%. Spot gold up $11 the ounce now to $2,038, up 0.5%. And West Texas Intermediate crude up 1.6%, $73.63 a barrel. Oil trading near its highest close in more than 2 weeks as more companies steer clear of the Red Sea amid a spike in vessel attacks along the key shipping conduit. Oil stocks are advancing today. Case in point, we've got ExxonMobil up now by 1.2%. ADRs of BP, they're up by 0.9%. Chevron up now by 0.9%. Again, crude oil is advancing right now by 1.6%, $73.63 a barrel. Again, recapping, stocks higher. S&P up 17, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
In what could go down as the least productive Congress ever, that's at least the record here for the first year. Pretty remarkable when you look at this. Everyone's going to be going home. It feels like maybe tonight, early tomorrow, depends on when they can get on airplanes. And there are a couple things left to be done here. We've talked about this, a short-term FAA authorization extension, not a real one. Maybe they can clear a couple of four-star generals. We're going to talk about that with General Pinaro next hour. But look at the stats. Only 20 bills have passed both chambers and become law this year, according to the firm Quorum that provided the numbers to Axios. 20 bills this year. They include important legislation to rename VA clinics and another to mint a coin commemorating the birthday of the Marine Corps. For perspective, considered some of the least productive years, the 104th, 112th, 113th, the first year didn't get a lot done. Republicans held one or both chambers, in that case under Clinton and Obama. They passed in excess of 70. We've gotten through 20, suggesting that the session so far is a fail. Let's assemble the panel. Jeannie's with us. Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, of course. And look at Lester's back. Lester Munson, Republican strategist, co-head of the international practice at BGR Government Affairs, spent a number of years in the Senate. In fact, Senate Foreign Relations Committee, which keeps him steeped in foreign affairs, as we discuss frequently here on this program. Great to see both of you. Jeannie, am I being unfair?
No, I think the sound effect you just played perfectly encapsulates the year in Congress. You know, I was just thinking back, the beginning of the year, we spent so much time watching the Republicans struggle to elect a speaker. And as you know, we spent much of January doing that. In between, they passed a measly 20 bills, much of which don't matter that much. And of course, this is the reality of a divided government in a highly partisan and politicized time. But, you know, the reality is there is so much to be done. So anybody who looks at these polls and scratches their head and wonders why people feel so frustrated, this is why. They're looking at a government in D.C. which seems utterly stuck and unable to address even basic challenges like passing a budget, which should hardly be a challenge for a Congress.
Lester, I guess you get an E for effort for the senators who stayed overtime under the guise of working on a border deal. I think Jeannie was one who never thought that was going to happen. I wonder what your thoughts are. As Ami Bera tells us, he expects a deal to emerge early next year. This would be a huge accomplishment for this body. Is it possible?
It sure seems possible. We're hearing good reports from Democrats and Republicans. I have to say, I think in the grand scheme of things, amazed that they're able to work on this very contentious issue so quickly and in a constructive way. And it could be, we would have to change our evaluation of this Congress completely if they're able to get a deal on this next month. I will just say, pertinent to the earlier discussion, Joe, it's not always terrible if Congress doesn't do stuff. Congress doesn't have to be super active. I think this Congress has a mixed record. It's been very entertaining, for sure, and it's produced a lot of news, and so the news industry should appreciate that. But I do think Republicans in particular need to prioritize what they want. If they really want some budget cuts, or if they really want to fight these social battles, they're not going to be able to do both. Pick one, stick to it, and get some things done, and that's probably going to be better for you in the long run.
So an E for entertaining, if not for effort, Jeannie. I don't know where we're going here with either of these two elements of the supplemental request, hinging on the border deal. One, of course, is Ukraine. The other is Israel. You just heard Ami Bera. This matter involving Israel is becoming pretty divisive inside the House, just like Ukraine already was with some Republican members. You've got progressives who say no money to Israel for this type of continued operation. Is it possible that neither happen?
I hope not. I hope that they are able to come together on both Ukraine and Israel in the new year already, given the fact that we've heard in the last few weeks that we have run out of money for Ukraine. The situation is dire. I still think there is bipartisan support for funding Israel and funding Ukraine. I think the wrinkle here is the enormous challenge of our own border security, number one, and also the fact that the incentive structure to get something done is all wrong as we enter an election year where the Republican Party's lead candidate is opposed to funding both Ukraine and to getting or allowing there to be a border deal under his major opponent, Joe Biden. I think that makes it really tough. You couple that with the fact that progressives are frustrated with what it looks like the Biden administration may give away on the border and the Freedom House. So I think it's all about the border at this point. And I think one thing, if this doesn't happen, and I am not as optimistic as either the representative or Lester that it will, if it doesn't happen, I think a lot of questions will be raised by this tactic of bundling. I understood why the White House pursued this, but when you add difficult things on top of difficult things, the reality is sometimes nothing happens. And that is a huge problem for everybody in the United States and abroad that's being impacted by this.
Well, there's a lot there, Lester, and I'm not sure where you see this going necessarily in terms of funding for both. They are each controversial on their own here. And when you look at this New York Times Siena poll, it certainly makes you wonder for Joe Biden. 2/3, as I mentioned, of young people speaking to this poll, this 18 to 30, disapprove of the job he's doing. But then you've got the Trump effect, and I'm glad that Jeannie brought this up. We now know, apparently, that Speaker Mike Johnson's talking on the regular with Donald Trump. The last thing Donald Trump's going to want to endorse is a border deal that involves Joe Biden, right? I mean, if he disapproves of, criticizes any deal that comes out of this Congress, it's going to be difficult to pass in the House for Republicans, won't it?
Maybe. Let me say something real quick about the young vote. Young folks are less likely to vote than older folks. Young folks have a shorter attention span. President's got a real opportunity here to show leadership, solve a bunch of problems in one fell swoop, and then whatever damage there may be to his voting base, he can spend the next 11 months fixing that. And frankly, not a lot of people in November of 2024 are going to remember the deal from January 2024 when they're in the voting booth. So I don't know that that's a real break on him. I think he should proceed with doing the deal. Joe Biden is very good at cutting deals with folks who disagree with him. It's his great virtue. He needs to turn into that to get reelected. On the Trump question, I think I'm no fan of former President Trump, truly, but I absolutely think Speaker Johnson should be talking to him. He's got to manage that relationship. If he is using those conversations to tamp down Trump opposition to a deal, great. And if nothing else, it'll give him kind of advance warning of where the rhetorical difficulties are going to come from on the right. So he's got to deal with those. That's a tough job he's got as Speaker of a crazy caucus. with not many votes to prevail in the House. He's got a 2 or 3 vote margin. It's a hell of a difficult job. He should be talking to everyone who will listen to him.
Does that not make this more of a challenge to turn into law, though? If Donald Trump says vote against this, if he starts whipping the Freedom Caucus and his other friends, who are numerous in the Republican conference in the House, this thing could be DOA. It's a movie we've seen before.
Joe, I don't think there's a grand scheme of the universe that former President Trump is advancing. I think he's listening to the last person who talked to him, and he's thinking about whether they were persuasive or not. And if Speaker Mike Johnson is talking to him and is persuasive, I think that'll make a big difference in the things that he says. So good for him for talking to him.
Then again, if it doesn't include a wall with Trump's brand name on it and paid for by Mexico, Jeannie, what do you think?
Then I don't think it's going to happen. And one thing we know about Trump, he will not let his opponents get a win. This would be an enormous win for Joe Biden to get another in a long line that he's been able to strike. But Trump's going to work against that. Where was Elise Stefanik yesterday? She's in Florida at Mar-a-Lago. She is raising money. That is the Republican leadership. I can't imagine he is going to do anything but try to, the former president, whip against any kind of deal. I'm not saying he'll be successful, but it is an enormous, enormous challenge as they try to work this through the House. And let's not forget, this thing could be sunk by the Democrats, progressive side, and the Freedom House caucus. So it's going to be really tough for them to get this together. I hope they do it, but I am not optimistic it gets done.
So you're saying there's a chance. Lester Munson, Jeannie Shanzano, great conversation going already as we turn next to the campaign trail. I'm Joe Matthew in Washington. Let's bring you up to date on world and national news now. Scott Carr has that for us in the Bloomberg 99.1 newsroom. Hi, Scott.
Good afternoon, Joe. A funeral is being held at Washington's National Cathedral for former Supreme Court Justice Sandra Day O'Connor, who was honored yesterday at the Supreme Court. Ahead of today's service, O'Connor, of course, became the first woman to sit on the high bench after being appointed by President Reagan in 1981. Before that, O'Connor was the first female majority leader of any state legislative upper house when she led Republicans in the Arizona Senate in 1972. She died this month at the age of 93. This year saw the largest population growth that the country's seen since the pandemic. The Census Bureau is crediting fewer deaths and immigration returning to pre-pandemic levels for the rise in population. Almost 90% of the nation's growth happened in the South. The increase is still relatively low historically, though. Following antitrust complaints brought by attorneys general in about 3 dozen states, the parent company of Google, Alphabet, will pay $700 million and change its Google Play policies to remove barriers to competition in the markets for app distribution and payment processing. A federal jury in San Francisco has sided with Epic Games over its claims that Google Play app distribution, payment, and fee policies were unlawful. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index all advancing. We have got equities holding on to gains while yields are falling after surprising housing data this morning left traders betting that the Fed is on track to engineer a soft landing and start cutting rates. NASDAQ 100 index holding at a record, up 56 points, up 0.3%. NASDAQ Composite Index up 68, up by about 0.5%. S&P 500 index up 20 points now, gain there of 0.4%, while the Dow Jones Industrial Average is up 200 points. That is a gain right now of 0.5%. 10-year yield 3.92%. The 2 years yielding 4.44%. Spot gold up $11 the ounce to $2,038, up by about 0.5%. And West Texas Intermediate crude oil now higher by 1.3%, $73.38 for a barrel of WTI. Traders are digesting data that showed a surge in new U.S. home construction in November. And with more on that story, here's Bloomberg's Vinny Del Giudice.
November housing starts at a 6-month high. Builders are benefiting from the dearth of property listings. Loan costs are down, too. The average mortgage rate dipped below 7% for the first time since August. There are signs the Federal Reserve may be done lifting interest rates that stop inflation. Vinny Del Giudice, Bloomberg Radio.
Among the names scheduled to report earnings today after the close of trading, we will be hearing from FedEx. FedEx shares now up by 0.5%. Rival UPS up by 0.3%. Recapping, stocks are higher. 200-point gain now for the Dow, up 0.5%. Record there. We've got the NASDAQ 100 index also at a record, up 58, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
How many issues can you imagine Senators J.D. Vance, Josh Hawley, and John Fetterman coming down on the same side? It actually is happening right now, which is kind of remarkable, and I want the panel's take on this. As J.D. Vance and Josh Hawley send a letter to the Biden administration urging they move to block this deal that sees a Japanese company buying U.S. steel. This is a huge headline from the past 24 hours. If you're a stock trader, you probably know about it. Big day for U.S. steel. And, of course, we know where they are based. John Fetterman, of course, fashions himself a steel man, speaking in a video from his hometown in Pennsylvania. Here he is.
I'm standing on the roof of my home right here in Braddock, Pennsylvania, right across the street from the Edgar Thompson plant. And I just have to say it's absolutely outrageous that they have sold themselves to a foreign nation and a company. Can't do that. Steel is always about security as well, too. And I am committed to doing anything I can do from using my platform or my position in order to block this.
He's right. Steel is about security, and I want to assemble the panel for their take on this. Jeannie Shanzano is with us today, Bloomberg Politics contributor, Democratic analyst, joined by Republican strategist Lester Munson from BGR Group. Lester, are they onto something here? I don't know if the Biden administration is going to move to try to squash this deal. This is Japan's Nippon Steel, again, buying U.S. steel, one of the most iconic companies in American history. Do you think Hawley, Vance, and Fetterman will stop it?
I don't know that they will. They will certainly cause a stir. I think the thing they have stumbled on is called xenophobia. So they seem to have that in common. It's unclear to me why a business deal with an allied country would be somehow bad for American security. We're as closely allied to Japan as we are to anyone. The economics in the steel industry are difficult under the best of circumstances. It is a good thing that Americans can invest in assets abroad. It is a good thing generally that folks in other countries can invest here in the United States. So I'm generally speaking rather opposed to this criticism, subject to some of the details of the deal coming out. But for sure, the politics are benefiting populists on both sides.
This is interesting. The United Steelworkers urging U.S. regulators to scrutinize the $14 billion deal. Jeannie, are these politicians driven by xenophobia or national security?
I hope it's not xenophobia. I think they are probably driven by the fact that they all have close connections in their states with these unions and these workers. I mean, let's not forget, we're talking about, the Pittsburgh Steelers. This is an 120-year-old plus company in the United States. It's an iconic company. This is 3,700 workers. And while we hear that they will, Nippon will agree to abide by all the labor agreements, those are enormous concerns. So I think, there's a lot of nostalgia there. There's a lot of politics there. On the flip side, I do agree with Lester. We are not in World War II. Japan is one of our closest allies. We would hope this isn't xenophobia. And we also can't forget that Nippon has a handprint, a footprint in North America already. They have plants, they have space in places like West Virginia, Indiana, Mexico. So they are, closer, I think, southern United States. They are closer, I think, than people maybe realize. But this is certainly getting a lot of play. It is bipartisan. Because of the politics surrounding Pennsylvania, it's going to be very curious to see if and what Biden has to say and the administration has to say about this deal as we march into the 2024 election.
Absolutely, particularly with his affinity for the United Steelworkers Union. Where do you think this goes politically then in a campaign year, Lester? Donald Trump's going to weigh in on this, speaking of xenophobia.
Well, Trump's going to weigh in. I expect Sherrod Brown, the incumbent senator in Ohio, who I believe is up for re-election next year, to be outspoken on this at some point as well. So it'll be interesting to track theirs. I do think it's notable that, we're getting this populist reaction from both parties. There seems to be no home for kind of the sensible support for business management in the United States anymore. And that kind of makes me think maybe there's an opportunity for a third party here. Gosh, next year might be more interesting than we think.
Well, I'll tell you, the administration has had a pretty heavy hand when it comes to antitrust. This FTC has been busy, Jeannie. Do you think that the White House would have a problem with this in principle?
I think they are going to want the deal and the parameters of the deal closely scrutinized. I think they are going to be supremely concerned about the impact on labor, as you mentioned, given how close Joe Biden is and how much he depends on it. And let's not forget, just back to the politics of this as it pertains to labor. These are states where the margins of winning and losing are sometimes in the thousands over the last several election cycles, as you look at Pennsylvania and Michigan. So they want to be very careful not to step on any support they might otherwise have. And I think that's what we're going to see them vying for. And, the reality is that this deal also, there are a lot of questions being asked about now why Nippon is paying, what is it, $55 per share, which most people say is an overpayment. And so I think it would be really incumbent on Fetterman and Vance and any of the other senators and skeptics to say, what are the national security concerns here? You're hearing some things about chips and others. Those need to be brought out. They need to be brought out now because, again, the deal, they were hoping to finalize it in just a matter of a few months by mid-2024.
Just wait for those hearings. In our last moment here, Lester, who's going to win the union vote in this presidential election? Will it be a Democrat or a Republican?
Well, I think Joe Biden needs it to win. Donald Trump stole that vote from Democrats in 2016, and Joe Biden got enough of them back in 2020 to win, to defeat Trump. I mean, it's a little bit more complicated than that, but they're both going after that demographic. There's no doubt, and I would look for both sides to be making. They're going to look to drive out their supporters in that constituency. So they're going to make more and more extreme statements and be more and more demagogic on this issue in order to drive their voters to the polls. So I don't think that's helpful when it comes to good government.
Some final thoughts from our great panel. Jeannie and Lester straight ahead. We'll check world and national news as well here on Sound On, the fastest show in politics. We're just getting started. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bank of America CEO Brian Moynihan says his bank is continuing to invest in its markets division as it seeks to increase market share. And in a wide-ranging interview on Bloomberg Radio this morning, Moynihan also talked about the economic backdrop and the health of the American consumer.
What we look at is what goes on in our core customer base, and we try to talk about what is going on as opposed to what could go on and plan for what could go on. And, that's been relatively strong. And our team, the spending continues even today at about 4 to 5% over last year, half the growth rate of 22 to 21, showing the consumer has slowed down, consistent with inflation getting under control, consistent with, the Fed using the rate structure to choke off some of the activity, and it's happened. But overall, it's been a decent year.
And Bank of America shares up 0.1%. Alphabet paying $700 million and altering its Google Play policies to settle claims that the App Store unlawfully dominates the Android mobile applications market. More from Bloomberg's Steve Rappaport.
Charlie, it resolves antitrust complaints brought by attorneys general of about 36 states and consumers. The deal calls for tweaks to Google Play policies designed to reduce barriers to competition in the markets for app distribution and payment processing. The lawsuits that were grouped together in federal court in California had threatened billions of dollars in revenue generated by the sale and distribution of apps through Google Play. State attorneys general alleged that Google used anti-competitive tactics to block competition and ensure that developers have no choice but to go through the Google Play Store. Charlie?
Steve Rappaport, this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington. Thanks for joining as we bring you up to date here. Kaylee Lyons will join the conversation in just 5 minutes. Right now, world and national news with Scott Carr in the Bloomberg 99.1 newsroom in Washington. Hi, Scott.
Thank you, Joe. Good afternoon. President Biden, among those honoring the late Supreme Court Justice Sandra Day O'Connor, at her funeral today at the Washington National Cathedral.
President Reagan described her as, and I quote, a person for all seasons. And it was a person for all seasons who we saw at that hearing, and the Americans and the world would see through her extraordinary service as a justice, and I might add, as a citizen.
The president called O'Connor a pioneer who broke down barriers in the legal and political worlds, as well as in the nation's consciousness. Crews are still at work across New England as hundreds of thousands of customers remain without power after the region was battered with high winds and more rain last night, knocking down trees and power lines, killing at least 4 people. 2 people were killed by falling trees in Massachusetts and in Maine. As holiday travel season revs up in earnest, the Biden administration's promising to hold airlines accountable for delays and cancellations. Transportation Secretary Pete Buttigieg said today the administration's been taking accountability to another level, following a meltdown last year with Southwest Airlines in particular that led to thousands of flight cancellations. Buttigieg calls on airlines to take care of their passengers. Odometer fraud is on the rise. A new report from Carfax finds more than 2 million vehicles on the road have rolled back odometers. That's a 7% increase from the year before and up 14% over the last 2 years. Carfax estimates that the average buyer loses $4,000 in value by buying one of the cars due to unexpected maintenance. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you, Joe.
Hey, Scott, thanks. An important moment. Scott mentioned it, actually, up in Northwest Washington today at the National Cathedral. Brought the president out, brought the Supreme Court out, and a lot of other dignitaries as well. As former Supreme Court Justice Sandra Day O'Connor was remembered, the president spoke. This is just a short time ago. Here's Joe Biden at the service.
Sandra Day O'Connor, the daughter of the American West, was a pioneer in her own right, breaking down the barriers in legal and political worlds and the nation's consciousness. To her, the Supreme Court was bedrock, the bedrock of America. It was the vital line of defense for the values and the vision of our republic, devoted not to pursuit of power for power's sake, but to make real the promise of America,
Some final thoughts from our panel. Jeannie and Lester are with us. Jeannie, what do you think she'd make of this Supreme Court as it stands now and the reputation that it's gathered, or I guess lost?
You know, I think for Sandra Day O'Connor, I loved what her youngest son, Jay, said. She was all about and committed to teaching civics to people. She had the startup iCivics. I've used it. It's tremendous, 85% market share and penetration in a matter of years. I think she would say to everybody, go back and reread the Constitution, learn about your government and your founding before you make any decisions, because democracy is something that you have to fight for.
What's your thought on that today, Lester?
So my late mother was a lawyer who went to law school in the 70s, and I think having Sandra Day O'Connor at the Supreme Court just a few years later really helped her in about a gazillion battles against sexism in the practice of law back then. And
wow.
She went to a law school where they didn't even have a women's room until after a few years after she got there. So real pioneer, broke a lot of barriers. What a wonderful American story.
I'm really glad I asked you both about that. Lester Munson, great to see you. Welcome back. Good to have you. And Jeannie Shanzano, Bloomberg Politics contributor. A great conversation. Kaylee's on the way in next. I'm Joe Matthew. Hour 2 starts now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Will Tommy Tuberville be officially outmaneuvered today? Welcome to Hour 2 of Sound On. With senators in town for a few more hours at least, they could confirm the remaining 4-star generals up for promotions held up by the lone senator's opposition to the abortion policy at the Pentagon. We're going to discuss straight ahead with retired Marine Corps General Arnold Pinaro, his take as well on the role the U.S. should be playing and will play ahead in both Israel and Ukraine. A deal on the border will have to wait till next year, it appears. So say Republicans in the Senate. We'll get the latest from Bloomberg's Billy House, and later on this hour, we'll compare notes with Bloomberg's Stephanie Lai as the Coke machine makes its case now for Nikki Haley. It's all after a look at Wall Street. Let's turn to trading now in New York with Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthew. Higher across the board right now. Gains for U.S. stocks. S&P up 21 at 47.62, up by about 0.5%. Equities are holding on to gains in the afternoon session. Yields are falling after surprising housing data this morning left traders betting that the Fed is on track to engineer a soft landing and start cutting rates. Right now, we have got the S&P, as I mentioned, up by 0.5%. Dow doing a little bit better, up 0.6% to higher by 218 points. NASDAQ up 68, up 0.5%. The NASDAQ 100 index, a record, up 57 now, up by about 0.3%. 10-year yield 3.91% with the 2-year 4.44%. Oil, West Texas Intermediate crude is advancing now by 1.4%, 73.52 a barrel, and spot gold up 0.6%, $2,039 the ounce on gold. Oil prices are trading at their highest close, near the highest close in 2 weeks, as more companies shun the Red Sea after a spike in vessel attacks along the key shipping waterway. Ellen Wald is a senior fellow at the Atlantic Council.
It seems that we're talking about an additional 12 to 14 days of travel time to go around Africa, but that's not the only issue here. We're also talking about increased fuel for ships, a longer trip for the crews on board. It's going to cost more. They're going to emit more carbon.
And all of this reflected in oil stocks today. ExxonMobil, case in point, up 1.3%. BP, the ADR, is up another 0.9%. Chevron shares up by 1.1%. Again, West Texas Intermediate crude up 1.5%. Right now, we have got West Texas at 73.50. Brent, by the way, 79.10 a barrel. Again, recapping, U.S. equities push higher. Cannot ignore the Russell 2000 index of small cap shares. It is the outperformer today, up by 1.7%. To put that in context, S&P up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. Things are moving today. I don't know how we even got here already because Kaylee Lyons is sitting with me, so I know it's Hour 2. Good to see you.
Likewise.
This is an important day, I guess, in coming to terms with reality. Senators, as I said earlier, have one foot out the door. All of 61 actually just showed up to vote last night.
Right.
So this idea of having some grand breakthrough in a deal emerging that we'll actually vote on seeming pretty thin right now.
Seems like it's not going to happen. I think we can say that with a great deal of certainty at this point.
So
Joe.
I've not gone out on a limb here.
No, I think jet fumes are in the air.
So I read.
A lot of people just didn't get on the jet back to Washington
That's
in the first place. But there is some business they can take care of in the next couple days before they wrap up the year 2023 in terms of congressional business, including the Senate today, possibly actually going to finally once and for all put an end to this blockade that Tommy Tuberville, the senator from Alabama, had going for so long.
Which the guy would be almost a year in on this now, right? If they get it done. We're down to 11 four-star generals.
Correct.
If you listen to or watch Bloomberg Sound On, you know a lot about this story because we've talked about it a lot. And the remarks from General Pinaro are still echoing here in the studio, among many others. We've talked to Republican and Democratic lawmakers who have been outraged about this and railing about it on the air.
Yep.
And it appears that this is finally the day, as painful as it has been, it comes to an end.
Assuming they have enough
if they get it done.
People there to actually get these
Actually, you need enough people to
through.
show up.
Right.
Yeah, that's I guess the idea. So let us not predict. Let's bring the general in. Arnold Pinaro is back with us, retired two-star Marine Corps general and former staff director of the Senate Armed Services Committee. So he has a bit of an idea of how this stuff works. General, it's great to see you. Is this going to be the day we look back on, Tommy's last stand?
Well, Joe and Kaylee, I sure hope so, but I don't know because Senator Schumer, after they finally got Senator Tuberville to back down and we got 400 of our flag and general officers approved, like you said, almost a year, very, very negative impacts on our military leadership during that period. We have 11 four-stars, and some of them are the top warfighting commanders that we need to get in place because we tell the mothers and fathers that we're going to, that their sons and daughters they give us in uniform will be the best trained, the best equipped, and the best led. And he's holding up the best led. And he wasn't even in town. So if he's holding them, it's by remote control. And so Schumer either has to get closer, if Tuberville won't agree to unanimous consent, or he's got to get a unanimous consent agreement where they can just be voted on by voice vote. And, you know, with Senator Tuberville, you never know. He kind of, the last thing we heard from him publicly, he was still holding his ground. And let's just hope, as Kaylee said, they started smelling the jet fumes right after Thanksgiving. The do-nothing Congress has done absolutely nothing in the weeks they should have done leading up. But let's hope we get these 11 through. Again, 3 of them are the top warfighting commanders of our top military units.
Okay, so assuming, General, that they can get this done, if we're leaning here on the side of optimism, at this point, if everyone is to be confirmed, we can call this Tuberville blockade over. How much of the damage that was done is not able to be recovered from, if you will? Or is this something we can really put in the rear view? The military moves forward with not too much permanent damage done to it as an institution.
Well, we can't put it in the rearview mirror and it's not over. He could put his hold on again because we have more nominations coming in every week in the U.S. Senate. And so we don't have any agreement looking forward. And number 2, the military will never put this in the rearview mirror because they've been politicized. He used them as political pawns over a policy that he disagreed with that he had nothing to do with. And it's rumbled through. I'm over in the Pentagon a lot. I'm talking to a lot of folks that are still on duty, and they're not putting this in the rearview mirror at all. It's had a really negative impact on morale, on readiness, not just on the people in uniform, but on their families and their children.
Well, it sounds like we may not be done with this, depending on what the senator from Alabama decides to do early next year, General. I wonder if you share the frustration on top of all of this that many Ukrainians feel that military aid that they say is badly needed within weeks as they run out of money is locked up in a debate over our border with Mexico. Should this emergency funding be tied in with that type of domestic policy?
Well, Joe, let me just say that this has been one of the most disappointing things I've seen in the almost 50 years I've been working the Hill and working these issues, because we're going into the new year, and the national security as it relates to Ukraine, as it relates to support to Israel, as it relates to additional support to Taiwan, as it relates to increasing security on our borders, and as it relates to having a full year defense appropriation for our own Department of Defense. We're not going to be getting any sugar plums in our stockings this year. We're going to get big lumps of coal because the do-nothing Congress has done absolutely nothing. They're going to go into the new year. They have no agreement on the top lines. They have no deals worked out on this supplemental, that where Ukraine, for example, has already said they've run out of artillery shells. And so we are in a very, very bad situation because the Congress has been dithering and not getting their work done. And so I think the political reality is we've got a serious national security issue on the border. It's going to be tied to funding for Ukraine. Nobody's going to be able to get around that. So they just need to suck it up and get their work done.
Mm-hmm. Okay, well, General, this really has been cast as competing national security interests, if you will. There's a messaging battle kind of happening. On the one side, you have Republicans saying you have to address national security issues at home first, the U.S. border, before you go and give more money to defend another country's borders, speaking here of Ukraine. Is that argument valid, or are the stakes here when it comes to what a potential Russian victory in Ukraine could mean for the global order just too high for that kind of argument?
Look, the seriousness and the adverse impacts. The Wall Street Journal had an editorial today where one of their most distinguished columnists, retired now, but he writes every once in a while, said one of the big winners in 2023 is Putin, because he basically, the economic sanctions haven't hurt him. The West is tiring out. We couldn't get the final funding for Ukraine finished before he sees, and again, if Putin was to win in Ukraine, it would send a signal to China, to North Korea, to Iran, to be even more aggressive than they've already been. So while the border security is important, I don't see it in the same level, in the same drastic consequence that would occur, if Putin was to win in Ukraine. And right now, again, the Wall Street Journal, a very conservative newspaper, is giving plaudits to Vladimir Putin.
Quite a dangerous world we're living in here, General, because we can keep going as I point you to what's happening in the Middle East, and specifically this new task force to manage what's happening in the Red Sea, where we're seeing commercial shipping come to a halt based on persistent attacks from these Houthi militants in Yemen. Is it time for the United States to strike at the source?
Absolutely. I mean, look, freedom of navigation is an essential element of worldwide commerce, particularly for the United States of America. That's why we don't want China to basically have domain over the South China Sea, where $5 trillion of the world economy moves through there every year. The Red Sea, the Straits of Hormuz, Panama Canal, the Suez Canal, these waterways have got to be kept open. And frankly, it's ridiculous that basically we are allowing these $100,000 drones to go after our ships and go after these large tankers, and we're spending $2 million per missile to shoot them down. Frankly, where I come from in the military, you go to the source, and the Houthis are isolated down in Yemen, right down at the bottom of the Red Sea. We should be taking out their sites where they're firing these missiles from. That's a lot safer way and a lot less risk to our ships and to the tankers than basically trying to shoot them down in the air where they're on the way there. As a young second lieutenant in Vietnam, my main mission as a Marine platoon commander was to interdict the Ho Chi Minh Trail, where the Chinese brought supplies into the South. And I had this silly notion. I said, well, why don't we try to stop them up north when they're still in China coming through North Vietnam, so we don't have to fight with our bayonets when they get here right into our face. Well, what we ought to be doing with the Houthi rebels is taking out their sites where they're firing on our ships before our ships. $100,000 missile, if it was to hit one of these billion-dollar destroyers, just like happened in the first Gulf War when one of our big naval combatants hit a $25 mine, it did $1 billion worth of damage. It's just way too risky to do it the way we're doing it now. Certainly, we should have freedom of navigation and keep these waterways open, but we should take the fight to the Houthi rebels where they're firing the missiles.
Well, General, you just described as the Houthi rebels as being isolated, and yet aren't they a proxy for Iran, which is potentially a much greater threat? And I just wonder if the U.S. were to take that kind of direct action, if that actually escalates the threat of this turning into a wider regional conflict.
Well, Kaylee, I meant isolated geographically. They're located in other words, meaning they would not be hard for our attack dogs to find them. They're isolated geographically in a small part of Yemen at the bottom of the Red Sea. We do worry about escalation, but look, Iran has been operating with impunity. We are not deterring them. We have got to take much stronger action, not just against the Houthi rebels, but against the Iranian proxies that are attacking our forces in Iraq and Syria. And we haven't sent a strong enough message that there would be consequences to pay. And again, I don't think Hezbollah has not jumped in the northern tier other than, random attacks. And Iran does not want to get into a shooting war with the United States. I think the fear of escalation is not a realistic any more than I thought the fear of Putin using nuclear weapons and escalating. I think we were way too timid when we first went into Ukraine and held the Ukrainians back when they could have been attacking the Russian supply lines in Russia.
Well, let's hear you out on what's happening in Israel, because the Biden administration is being told to start pulling back and delivering that message to the IDF to end this phase of the war with Hamas. Is that what needs to be done now, General? And how do you respond to the critics? And there are a lot of them. We're hearing from them every day here on the program. The administration is hearing from them as well. Critics who say you can defeat Hamas without killing as many civilians in Gaza.
Well, certainly, as someone that's operated in a number of wars in built-up areas, combat in built-up areas and urban areas is extremely difficult. Clausewitz pointed that out. It always favors the defender, which is, of course, in this case, Hamas. You can operate in these areas and minimize civilian casualties. You're not going to eliminate them 100%, and I think more could be done on that front. But on the other hand, both the Houthi rebels and the Hamas, they basically say death to America, death to Israel. And Hamas wants to wipe the state of Israel and all the Jews that live there off the face of the earth. And so Israel has got to basically deal with this threat. I mean, frankly, if citizens in the northern part of the United States or in the southern part were attacked from terrorists, either from Canada or Mexico, the citizens of this country would demand our military to be responding. And so I think they can be more careful, but in the final analysis, combat in built-up areas is a very, very different. You've got to root them out, and basically the only way that Israel is going to basically protect their sovereignty and protect their own citizens is they're going to have to take Hamas out where they are, and they hide in tunnels, they hide under hospitals, they hide in protected targets, and they've given the Israeli military no alternative but to get in there and go, in close encounter. And that's just the bottom line. But guess what? It's been like that in every war that we've been in. You look at World War II and you look at the U.S., of course, was taking on Hitler in Japan, and look at the amount of civilian casualties, unfortunately, that had to be incurred to be able to win that war. And I don't want to come across as a warmonger, but let's face it, I guarantee you, if the citizens of the United States of America had the same risk the Israeli citizens have, they would demand that our government and our military take those threats out.
All right, General, we'll leave it on that note. As always, we appreciate your insight. Thank you very much for joining. Happy holidays and Happy New Year to you, even if it is a year that Joe clearly could potentially still bring great geopolitical risk. And interesting to hear from the General there that the military strategic reality may be running into pretty direct conflict with the political reality of the climate here in the U.S. for the administration. On the one hand, Israel needs to do what it needs to do to defend itself on the other, it's getting very hard to justify the cost in civilian lives.
It's a really complicated conversation. Not going to get easier in the new year, but we will continue having it here, Kaylee. Thanks again to the General. With Kaylee Lines, I'm Joe Matthew. Glad you're with us on the fastest show in politics. We'll have a lot more straight ahead from Washington. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher, keeping pace after the latest policymaker tried to rein in expectations for Federal Reserve rate cuts. S&P right now up 21 points, a gain of just about 0.5%. The Dow 37,500 up 194, also up 0.5%. The Nasdaq Composite Index up 73, up 0.5%. The Nasdaq 100 Index up by 0.4%. 0.6%. The outperformer, though, small cap shares. The Russell 2000 index up now by 1.75%. 10-year yield 3.92% with a 2-year that's yielding 4.44%. Spot gold up $11.50 the ounce to $2,038, up 0.6%. And West Texas Intermediate crude oil is up 1.3%, $73.43 a barrel. Activist investor Sevian Capital is making a $1.3 billion bet on UBS's bid to overtake Morgan Stanley as the world's preeminent wealth management company. The Stockholm-based firm has announced that it has amassed a stake of about 1.3% in the Swiss bank over the course of this year, making it one of the lender's biggest shareholders. UBS shares are up by 5.6%. FedEx reports after the close of trading today, FedEx shares up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Well, it sure seems like we're all done here with the exception of a couple of details. Kaylee, new headlines here. The minority leader says we're not there yet, which is a headline we could have run yesterday or
the day before.
The week before that.
Yep.
So the question, I guess, is will we still be running that headline in January when this is going to get a lot more serious?
Yeah, and he is taking this seriously. He says it's extremely important to get a border deal, but extremely important doesn't mean extremely easy, as we have learned repeatedly, not just over the course of this negotiation, but frankly, immigration border-focused negotiations for decades now, Joe.
That's
We
right.
know that this is hard work, and they're still working on it. It's just a question, to your point, of how quickly they can actually iron this out when they have a lot they're going to need to deal with when they come back for the new year.
That's right. And, you know, with those decades having gone by, he's not about to be rushed, which is the message from a lot of Republicans. John Thune and others say, you know, you don't even have text yet. We're going to need a minute. So this idea of a vote this week might be pushing it a little bit far. Here's Mitch McConnell speaking on the floor earlier.
That Republicans will not make up for others showing up late to the table by waiving our responsibility to carefully negotiate and review any agreement before voting on it.
I love the way every Republican now. So we now, if the White House had shown up a little earlier, like, well, they just got here 5 minutes ago, which that now is the reason apparently why there's no deal if you ask certain members of Washington.
The White House is at the table now.
5 days ago, I believe.
Yes.
And so is Billy House. I'll tell you what, a lot of people have left town, a lot of people left the Capitol. Not this man. Billy in the house with us live now on Bloomberg Sound On from the House of Representatives. Billy, we're going to come back here having the same conversation the first week of January. And lawmakers will have 10 days, I believe, 10 work days to avoid a government shutdown. What's January going to look like?
Well, it's going to be a mess. In just a few minutes, would possibly may get the final word that they will not vote on that supplemental Ukraine border security funding bill until January. On top of that, of course, we know that in 8 days after they arrive, on January 19th, the first half of the appropriations bills that need to be renewed come due. And we don't even have top line numbers for most of those. And then February 2nd, the rest of them. So we're staring into a partial government shutdown the minute they arrive, within a week and a day, and they've got all kinds of other things to do. So, you know, it's looking already very crowded with few paths wide open on how to achieve these things.
Yeah, Billy, Susan Collins, the senator from Maine, is just speaking to some reporters at the Capitol, we understand. And the quote from her, January is not going to be an enjoyable month. And maybe that's the polite way of phrasing it, Billy. If that's the case, if they know they're going to come back to boatloads of work, why aren't they here? Or if they are here, why are they leaving? Why procrastinate?
Well, for one thing, if you want to, the Senate is here technically. They may leave tonight after extending the FAA bill and doing some military nomination, lifting some holds on military nominations and going through with those. But the House, as we know, took off last week, and the new Speaker, Mike Johnson, essentially said, you know, the Senate, the Democratic-led Senate and the White House, if they really wanted a border deal and a Ukraine deal, they would have come to us a lot earlier than these final couple of weeks of the year. So we're not sticking around. We're not going to be rushed or jammed. See you in January.
Everybody's all upset about being jammed all the time. That's like the big disrespect on Capitol Hill. It's so funny. We're not going to be jammed by the other chamber, and certainly not over the holidays. We know the speaker's on the phone with Donald Trump a lot. Billy, we were talking about that with our panel last hour. I don't know if you see that as good or not, but if you're Joe Biden trying to put a border deal together, is that the greatest challenge or problem that you have?
I just talked to Senator Lujan from New Mexico, and he is complaining about what he calls the ugly language coming out of the Trump camp and Trump himself on border issues in the last week or so. Let's keep in mind, January also brings us closer to the primary season and the presidential election season, and all that is going to heavily impact what lawmakers do here at the Capitol. So the Trump-Johnson discussions clearly trouble Democrats and possibly some within the GOP itself.
Well, we were trying to game this out in some of our editorial conversations earlier, this idea that what if former President Trump pushes Mike Johnson or others in the House not to accept a border deal that was negotiated with a Democratic White House. And I just wonder for a lot of those more vulnerable Republicans, maybe some that are in the districts Biden won in 2020, others that are in border states that are dealing with these immigration and migrant issues, can they go on the record not voting for border security? How do you see this playing out?
Well, that's a very interesting question. It's not as clear cut as you might think. For instance, in upstate New York or in the suburban New York City counties and a little further up the Hudson River, Republican lawmakers there have been battling New York City's transportation or busing of their migrant overflow upstate to areas they say can't handle those. So that's sort of a microcosm of what Republican mayors have been complaining about throughout the country. So there are Republicans in swing districts that Biden won or areas he won and that are finding some political ground to complain about the migrant crisis as well.
We mentioned the time remaining here, and it's not looking great with 10 days to avoid a government shutdown. Billy, or is it? Can they make some magic here when they get back by tying some spending bills together, or is Mike Johnson going to get fired if he does that, if we start going the minibus or omnibus route to keep the government functioning?
That's the absolute million-dollar question. Let's not forget the day they left, the day this House left town, he was under siege for holding a vote on a defense policy bill that required Democratic votes to pass. And that led to grumbling, a deja vu of a former speaker's troubles. McCarthy, who, by the way, his resignation becomes effective from Congress on the end of this year. His resignation letter was just read on the House floor. So Johnson's going to have trouble just doing basic things, getting bills passed, the same as McCarthy did, and it'll all seem very familiar, I fear.
Well, and of course, we all know the eight Republicans who joined with Democrats to oust McCarthy in the first place. Who are the individuals that would be most likely to act against Mike Johnson? Is it the same cast of characters, or are we talking different ones here?
It's pretty much the same. You don't see the venom from Matt Gaetz of Florida that you did, his vitriol against McCarthy. But new House Freedom Caucus chair Bob Good of Virginia has said he's ready to utilize whatever tools he has. Asked if that meant removing the speaker, he stepped back from that a bit. But he's ready to stall legislation and hold up things on the floor if we see a repeat of what McCarthy used to do.
Mike Johnson knows he can't operate without Democrats, though, right? I mean, at some point, this needs to come to a head.
It does, but it's also an election year, and one wonders if even the far-right conservatives, the right flank, realizes their very majority might be at risk, but the way they're talking, that doesn't seem to be a priority to them right now.
Must be exhausted, Billy. Can you imagine Billy House after this year knowing what we're going into here?
I just wanted to ask Billy, you've been at it a long time. Is this going to go down in history as the most dysfunctional year in Congress you've ever covered? 2023, one for the record books?
Yes.
Well, there's 2 years to each session. Let's just say this first year, this opening year, has not only been incredibly historical, the removal of a speaker who barely got elected after, 15 rounds of votes in the first place, a debt ceiling saving. Yeah, it's been a bad year. And in terms of legislation, only 22 bills have been signed into law so far, and that's an all-time low.
An all-time low, ladies and gentlemen. This is our Congress. Billy, great to see you. Thanks for coming over to talk to us. Good luck with closing things down up there. Billy House might be the last man in the room reporting for Bloomberg here.
Yeah, in the crypt.
In the crypt. If you're with us on YouTube, you know what we're talking about. Go there now, search Bloomberg Global News. We'll meet you in just a couple of minutes back here in the studio because we have to check the news, right? World and national news, and Scott Carr has that for us in the Bloomberg 99.1 newsroom in Washington. Hey, Scott.
Indeed. Good afternoon, Joe. President Biden among those honoring the late Supreme Court Justice Sandra Day O'Connor today at her funeral at the Washington National Cathedral. The president called O'Connor a pioneer who broke down barriers in the legal and political worlds as well as in the nation's consciousness. O'Connor died earlier this month at the age of 93. Republicans in the Senate have closed the door on any sort of quick deal regarding security at the U.S. southern border, leaving votes on aid to Ukraine and Israel waiting until the new year. Bloomberg's Amy Morris has details from Washington.
Senate Majority Leader Chuck Schumer had said a vote could come this week, but John Thune, the number 2 Senate Republican, says negotiators were not able to resolve sticking points during talks over the weekend and that a vote on the border deal is, quote, not going to happen. Now, while it's possible the parties can reach a deal in principle by the end of this week, that only tees up votes on the legislation by the first or second week of January. The Pentagon has said it will run out of money to replace U.S. weapons sent to Ukraine unless Congress approves new funding before December 30th. In Washington, Amy Morris, Bloomberg Radio.
For the second time in U.S. history, an Air Force general will face a court-martial. Philip Stewart led pilot